How's it going? Richard here from Hola Prime. Joining me today, Troy and Tiger. How's it going, guys?
Hey, it's going all right.
Yeah,
All good.
awesome. Good stuff. Good stuff. Yeah, to all our viewers, thanks for joining. As always, if you've got any questions, please let us know and we'll get back to you. I think Tiger's going to kick things off for us today and first shows what's on the economic calendar. Quite a few things happening in the AM session. So, yeah, please, Tiger, let's go and do that.
Yeah, sounds good. We'll get the calendar pulled up here real quick.
There we go.
Yeah. So, yeah, like we were talking about a little bit earlier, there's a lot of lip flapping today. We got all kinds of people talking at 8:30 Central Time anyway. Got the President Lagarde speaking for the Euro or the Eurobank, Governor Bailey for England, Governor Ueda. A lot of people don't know how to pronounce his name, but it's Ueda. In
Ueda.
Japan, and then
I think
Fairchild.
they're all at the same meeting, aren't they?
What's that?
Are they not all at the same meeting, or is it like a virtual thing?
Yeah,
Policy panel.
I believe that's what it is. And then obviously, yeah, Fed Chair Powell. So as always, anytime they speak, especially if four of them are in the same room, things could go haywire for whatever currency. Up and down, up and down. So it's always good to be careful. Wait and see what comes out of it at the end. See if they've got some dovish or hawkish type, lingo. So just a good time to be careful. And then obviously at 9 o'clock Central Time, we do have the Purchasing Manager Index for the manufacturing sector coming
Right.
out. And it's under the 50 baseline, which is technically contraction. Contraction, but it is projected to go zero point 0.3 higher than last month. Of course, we'll see how that shakes out. And then for the JOLTS job openings, I was just looking at the graph on here. You guys can, as you can see, I mean, since really May of 2022, this has just been a slow and steady grind downward. Yeah, just a slow and steady decline. So today they do project a little bit less than the previous month. So yeah, we could definitely see the dollar dropping for a little bit there anyway, more than it already has. So
Yep.
I
between
always I always love that Jolt's job opening. Say it 5 times fast.
Joel's job openings, yeah, that's pretty
It's one
tough.
of those tongue twisters.
It's even hard. It's even hard to say tongue twister.
Yeah, yeah.
But yeah, the manufacturing PMI. I don't know. What do you guys think? I think the services PMI really kind of moves markets a little more than the manufacturing PMI. I mean, obviously 50, 100 years ago, the manufacturing PMI would have been the strongest, but with all the technology we have in the world these days, obviously I think that moves it a lot more, but it's still
Like the markets, well, the indices at least just go up anyway, regardless. So,
right. Just buy.
yes.
Yeah.
No, obviously we do care, but it's just like
Yeah.
he doesn't react to it anymore.
But yeah, I'm sure President Trump keeps a close eye on that since he's trying to bring manufacturing back. So, but yeah, that's really the main ones for today. We do have some other medium impact stuff coming out,
Right.
and the retail sales for the Aussie dollar later on this evening. And that's basically it for today's economic calendar. Just a couple news events that's going on in the U.S. anyway today. So the Senate is still deadlocked. They've been voting. They've been on this crazy votorama for 21 hours now. So they just keep throwing amendments back and forth and pretty much voting everything down because nobody wants to agree on anything. I would not want to be a senator. They've been in the chamber since all weekend and all day yesterday, and they're still in there today. So,
Is this something to do with a big but bloody beautiful bull?
The steaming pile of what.
The big beautiful bill? Yeah, they're fighting back and forth. And of course, even if the Senate passes it, it's going to go back to the House, and then they're going to complain because they edited it so much. And so now President Trump wants to sign it by Friday the 4th, and I don't know. I just don't see that happening because they can't agree on anything.
Yeah.
They don't want to give anybody credit. So anyway, that's just kind of what the Senate's up to. They're on literally 48 hours of no sleep, probably. I think the worst part about that is how they make the clerks read the entire, 970-page bill. They did that.
No way, really.
Yeah, line by line, and they're coached to don't talk too fast, don't talk too slow, make sure you enunciate. It's the most boring thing ever, but I did actually jump onto the Fox Live just to watch a little bit of it. And towards the end of them reading the bill the other morning, their voices were all shot.
I can imagine.
Throat loss. Yeah, like candy. So that's almost like job abuse, if you ask me.
Oh my gosh. Yeah.
But other than that, something that could probably be affecting these currencies upcoming. Trump seems to be kind of backing away from some of these trade deals, so to speak, and focusing a little more on the tariffs, because obviously we do have the deadline coming up. What is that, the 9th or something? The 90-day pause on the tariffs.
Yeah.
So, yeah, it's going to be an interesting next week anyway. Well, next week, if those tariffs go on. So we'll probably be definitely seeing some spikes in the markets. So,
yeah,
definitely something to keep an eye on over the next week and a half. And then other than that, yeah, Trump's visiting Alligator Alcatraz today. What do you guys think about that? Have you heard about that?
Why do you say alligators? Do they have alligators there?
So they opened up I don't know if it's a maximum security or minimum security prison or what, but they opened it in the Everglades, didn't they, Troy? And it's surrounded by a moat of water that's got thousands of alligators inside of it.
Yeah.
So they can't escape. So anyway, I thought that was just kind of a comical, news event for the day. I thought I'd throw that in there, but yeah, that's really it on the economic and news of the day front. Other than that, when it comes to the currencies, kind of like I was saying off air, all the majors, the U.S. majors, for me personally, with the style I trade, they're all sitting in overhead resistance points. So I'll show on my chart. Let me get it flipped over here. Okay. Basically, when it comes to the dollar pairs, I'm going to be more comfortable waiting for some deeper retracements on all these pairs, because if I just start from the top, I mean, there's the euro dollar. It's currently in a daily supply zone. So, I definitely would like to see some more deeper retracements, kind of like what I drew up yesterday. I do have a couple other smaller zones up in this area on the lower time frames. But yeah, anytime you hit major overhead resistance points or supply zones, I mean, even though it's counter trend, it tends to do a lot of deeper retracements. So
yeah,
I'm definitely going to be careful today. It's going to be a lot of just eyeballing and watching, but there's the euro dollar, there's the pound dollar hitting an overhead zone. The dollar Jap on the short sell side, same thing. It's bouncing into some 4-hour zones. New Zealand dollar for a potential buy, it's sitting in an overhead zone. And then the same thing with the dollar Swiss on the short sell opportunity side, and then the dollar Canada dollar. They're just all butted up on those overhead or under, those larger time frame supply and demand zones. So
yeah.
It's just one of those things of comfort for me. I won't look to necessarily take these, nearest zones to potentially buy or sell. I may just look for the higher zones, get a deeper retracement. So, yeah, that's just another one of those things that comes with experience. I've been chopped up to pieces in the past until I started really, looking overhead and underneath to the left. So,
yeah,
that's really what I'm looking at on the major pairs anyway. Just get some of those deeper retracements. And then other than that, I think my number 1, number 2, maybe number 3 setup might be on the Euro Japanese yen, the New Zealand Japanese yen, and I think even the Aussie dollar. I'm honestly going to be probably paying a little more attention to some indices today, Nikkei, and which I know Nikkei is closed right now, but the Nasdaq, and then even gold. That's kind of outside of the currency market. I'm gonna be paying attention to that just so I can try to get some more opportunities. So
Yeah.
if
100%.
I take a look at the Euro Jap real quick, Euro Japanese yen, there it is. It's real close to my 4-hour zone. So obviously a super strong uptrend of late over the last few months, actually, or well, few weeks, over the last month. Yeah, February, March, April. I can't math
Wow.
today. 4 months.
Mm.
But yeah, if I look at this most recent Fibonacci area with this most recent swing low, swing high, right on the 38.2 level, because again, it's such a strong incline, it's such a strong trend that I'd be comfortable, buying at a 38 level. Again, it's those ones that tend to move more sideways. That's where I like the deeper retracements, 50, 61.8. Just because it's just not showing as strong as something like this. So on the 38.2 level, if I just hide my master pattern real quick and my order block tool, yeah, you'll see that last down candle, that last red down candle before a nice strong exit. Got your favorite FVG, your fair value gap there. Yeah, pretty decent zone. That's the one I've kind of been looking at for the last couple of days anyway. It's also kind of, if it comes down and touches, it'll be bouncing kind of through that that anchored VWAP line I put on at this swing low point. So that's honestly my favorite setup today, is just keeping an eye on Euro Japanese yen. Of course, I got my alert set there. New Zealand Japanese yen. Yeah, I do have a further down. Excuse me. I do have a zone down, demand zone I think it's a 1 hour or 30 minutes. So that's another one I'm keeping an eye on.
Was that the one we watched yesterday with the highest score that you had there?
High score? Right now, yeah, New Zealand Japanese yen and then the Euro Japanese yen were at the top, I think, earlier in the week. But on my list today, it's actually New Zealand dollar and Euro dollar. Of course, again, they're just chilling in those overhead resistance points. So just looking for the deeper retracements. Outside of currencies, probably the DAX in Germany I'm keeping an eye on. And then, yeah, like I said, gold and silver is not quite up to a bullish spot for me. So it's just gold, Nikkei, and DAX. But, and NASDAQ. Yeah, and NASDAQ. So, but anyway, just to finish out the currencies real quick, let me look here. Euro pound. I wanted to show you guys this. This is another demand zone that hit while I was sleeping. It hit like 3 a.m. my time. Euro pound. Just to kind of show you the power of these zones. I had my fib level drawn up, and then on the 4 hour, as you can tell right there, just kind of wicked in nicely and pushed to the upside. So just kind of showing people more examples of the power of these zones. I mean, right on the 38.2 level. But yeah, they like to hit when I'm asleep, apparently.
Don't they always?
But yeah, that
most of the time.
Yeah, 2.5, 3 to 1, or 3 to 1 risk reward. So just kind of wanted to show an example of that there. Let me look at my list again real quick. Oh, yeah, I wanted to touch on the silver loss I had the other day. So today's Tuesday. I set a trade on Friday for silver, and I just thought it would be good to go over this real quick. You guys know we learn more from our losses than we do our winners. So, yeah, Friday, on our Friday morning stream, I ended up getting into the silver right around this area on my broker. Had me a stop loss down here and a take profit up here. But as you can see, obviously it dropped through my stop loss. So small loss. But I just, and I put this on the Discord just to kind of give an example of how news can really affect, your trades, even if it's a good trade. And what I put was, obviously at the time we had bullish fundamentals for the metals. But later in the day, after I placed that trade, the U.S. Canada, of course, had their little mini blow up with their relationship, following basically their trade negotiations. And then later on, President Trump had, he put on, or Governor Carney actually rescinded the what the tax thing, I can't remember what it's called off the top of my head, but anyway, the important thing to know is how news catalysts, no matter how good your trade is, can wick right through, just like you
Right.
saw. So when that happens, and this is what I was explaining on the Discord, is just because you have a losing trade doesn't mean your trade plan was bad. It just means
Exactly.
there's things out of our control that affect trades, and so don't get discouraged if you lose a trade or two in a row, because the best traders in the world, the ones that have been doing it 30, 40, 50 years, they're going to lose trades too whenever people open their mouths and start flapping their lips. So
yeah, I actually have a name for that. It's called the other side of the probability.
Okay.
Okay. So
Makes
if
sense.
you have a trade setup that you've determined is 80% right, we always focus on the 80% right, even though there's a built-in 20% wrong. Right. And so it doesn't matter if you've got a trade setup that's 80%, you're going to have a 20%. You're going to be on that side of the probability every once in a while. Otherwise it would be greater than 80%, right? So, I call that the other side of the other side of the probability. And it doesn't happen very often, but when it does happen, you just have to shrug it off and say, hey, that's the 20% finally got a voice, right? The 80% you screams all the time. The 20% never gets a voice, so to speak, right? And I think that we forget that every single trade has a built-in loss percentage. And we kind of go, how could we lose with 4 times in a row? It's 80%, right? Or 90% probability. And it has nothing to do with right, wrong, the other. It just happens to do with pure numbers, pure statistics. You're going to have a loser. 80% is what? 8 out of 10. What does that mean? 2 out of 10 are losers, and they're going to pop up, right?
Yep.
And I always get real frustrated when, especially when you have a run of 3 or 4 or 5 trades in a row where the setup is gold. The setup works over and over and over and over and over and over again. And then you get a couple of bad trades and traders are ready to throw that pattern out, that setup out, when really it's just a statistical, it's pure numbers.
It happens.
Sorry to interrupt you.
No, I appreciate that. It happens so often they make YouTube videos about it. I mean, you like I said yesterday, I think it was, there's 1,001 ways to trade, and I've probably done half of them. We all did.
Just don't take it personal and understand exactly what you said, Troy. It is going to happen. It can happen at any time, and just you have to deal with it.
And it might be the best setup. It might have other factors that are cheering you on, right? And it still doesn't work. And we get all bent out of shape about it, right? When it's maybe we had 10 of those winning trades in a row. You're due. You're due for a loser, right? The statistics, the number will catch up to you, right?
Then, you must know at least around the corner the next win might just be around the corner,
Right.
Especially if you're dealing with stuff that high. I guess the worst thing can also be if you just get pipped out and then it goes your intended direction. That's still a hard pill to swallow, but
no, like I'm so paranoid. I think it must have one of those. If I have 10 in a row, I start cutting my size down because I know that number's catching up with me. I've been lucky, up until this point. I'll start cutting my size down, even if the pattern continues to work, just because I'm superstitious as a trader.
Yeah, I bet, and probably almost nobody does that. So, but no, that makes sense because you don't want to get too big of a head.
Yeah.
Right? You don't want the ego.
One thing you do if you do that, Troy, is you're not letting your ego get in your way, right? You know yourself pretty well. That's also the other thing. It's like,
well, I mean, think about it. Even if, this is a Market Wizards comment, okay? If you've read those books, they'll give example after example after example where traders will say their worst trade was after a very long run of winning trades. So they got cocky, more cocky. It can't. It's really hard to push that emotion down when every trade you throw out there works.
Yeah.
You know, and you get cocky. And so you get that 10, 12, 14 trades in a row. Man, I just start getting nervous because I'm like,
Yeah.
you know, it doesn't matter. I'm going to, especially you feel all that rush, you know, you're like, oh, I'm going to do 10 contracts today, you know, because I've killed it the last week. I mean, that's a perfect recipe to do, you know, right?
And
To
that
have
is
that.
the worst, when you take that big hit and it wipes out all
Yeah,
of that profit, and then all of a sudden you want a revenge and you load it up some more, and before you know it, boom.
Yeah. No, I got
And
the
I've done that. I've done that in the past,
Yeah.
back in the days, many times. It's never again. Thank you. Because
Yeah,
you know, one of the worst things is like being so angry with yourself. You can't really go tell the missus or either, because no one really understands that. But
That's
imagine
right.
if you had like a boss overlooking your what you were doing, you probably would have been fired, right? So that's also another way I look at things. You know, you're just trading with yourself. You don't really have a boss looking over you, but you need some accountability. You know, you need to be able to pull in the reins and know when to hold back. Yeah, it's difficult, and that just comes with experience, I suppose.
Yeah, Troy, the best analogy I can, what you said about taking off size after X amount of wins. I mean, for me personally, I'm into bowling. I've always been a league bowler, tournament bowler, and you know, I've noticed, and this kind of translates into what you're saying. Like, I'll get on a string of throwing strikes, you know, 6 or 8 in a row, 10 strikes in a row, and that's when the focus starts to really hone in. I've noticed, like, I focus hard with my bowling, my, you know, my approach, my delivery and everything. But I've noticed that even though I feel like I'm trying up front, when I start getting on a long string of strikes, 6 or 8 or 10 in a row, that's when I've noticed that the focus starts getting down to more pinpoints. So, in other words, I don't want to do something stupid to wreck this long string of strikes I got going. So I'm just gonna hone in on the focus. But yeah, the other thing that reminds me of, just talking about the losses that are built into this, you know, into this career. I mean, the most annoying stat I've ever heard from on probabilities, which is actually one of my best friend, one of my bowling teammates' fathers told me this, because I would always complain if I had, you know, a couple good games, high scores in a row, and then a low score. So he said, Tiger, average is average. It's the most annoying stat ever, because I might throw a couple 250 games in a row, 250 and a 270, and then turn around, throw a 170, and then I start complaining. But that's just the law of averages, the law of probabilities. And so it's the exact same myth. It's the exact same philosophy in trading. No, there's no perfect system. So everything's bound to lose from time to time. It's just how you play the probabilities. So yeah, I don't know. That just kind of reminded me of that. It's the most annoying thing ever, because even to this day, when I go to my tournaments or my leagues, I'm like, I'll throw a couple 3 good games in a row and think I'm, you know, the top of the rankings, and then boom, get smacked in the face with a 150 game or something. Because, you know, for me, I average about 215 per game.
Wow,
So
that's good.
it just never.
You know, bowling is a game of geometry, and geometry is very scientific and very specific, right? And so it only takes a little teeny overspin or underspin, and you're not hitting that quadrant of pins in the right spot to knock them all down, right? And that's just like trading. It is, you know, your trading your trading method, it needs to be tweaked. You've got to constantly be tweaking it to kind of keep it straight, you know. So I love sports analogies. It amazes me how the same emotions and the same focus, the same discipline is required for most sports as it is for trading. So, you know, I love this analogy because people will look at me like I'm an idiot, and I'll say trading is a sport.
Yeah, really, it's an art. It's
and
sport.
We are trading athletes. Okay,
we're professional athletes. Okay, right. I like that.
That's right. That's
but No, that's great. Oh, I had a thought. What was it? Oh, my thought slipped my mind. But what was I gonna say? It was a good one. It had to do with bowling, but no, that was the basic thing. Was and then because you were talking about the overspin, underspin. Then there's the oil, the oil on the lane that constantly changes. No, that's probably why I like trading so much because, and it's funny you say geometry. It's a sport of geometry. I hated math, but I had an A+ in geometry. So I guess that's why I like trading. And I guess
funny enough, that's why I love geometry and charts as well. Really, really do enjoy
that's all it is. Just looking at patterns. Yeah.
Yeah.
Well, if we really want to define bowling, it's really geometry and physics, right?
Yeah.
And probably that's where our screw up comes in, is adding the physics into it, right? Mm-hmm. It's not just straight. It's not about just throwing the ball straight. It's also about the physics of force, right?
Yeah. Well,
and spin.
And plus, they have a sweeping hook, so it goes crazy.
Yeah, I'm the guy that shoots. I go right off center, just off center, off the center pin, and it's straight as an arrow. I don't have any spin. I don't have any of that. I just throw it straight and hard.
I'm the same with that, Troy. I don't even know how to spin it.
If I break 200, buddy, I'm having a good day, right? Yeah. I mean, or if I have a, what they say, a full, where each frame is not empty. You have a full frame.
Empty. Open.
Yeah, open you don't have an open frame, right? Is that the phrase?
Oh, open frame, spare, strike.
Well, open frame is when you don't have a spare or a strike.
Right. Yeah.
Right.
Correct.
Yeah. I mean, I feel like I could have a crappy score, but as long as I don't have any open frames, I'm feeling good, right?
Yeah. No, that's
so, you get the spare, but the kicker is a 1, right?
Yeah, that's my goal. If I fill all my frames, I'm halfway happy. But just to finish up my currencies real quick, I do have this 4-hour demand zone. It's a little higher up on the curve. It's not quite to the 38 level. So, if I were to, and I do like though how the former resistance point goes right through. I think I might have touched on this yesterday, but if I trade that one, I mean, I would feel more comfortable if price were to come up a little higher before returning like that.
Yeah, it's a bit of an overlap there.
Yeah. In fact, I think yesterday I didn't pay attention to that when I drew that. So yeah, give me something like this. Now I do have, just because I was trying to eyeball and find something this morning, I did find that on a smaller time frame, that little zone right here on a 15.
Right.
But yeah, it's just a little higher on the curve. The most recent low swing high from, was that June 23rd? I mean, that's obviously a really good spike up. So I'm just going to keep an eye on it. It's a narrow zone. It's only 5 pips wide. I mean, that's a potential, if I put a stop loss down in this area somewhere, just to give it a little more artificial room. I don't really like that. But I will keep an eye on it. I'm more interested in that higher time frame. Today, it's mostly going to be higher time frame stuff for me. Okay. I just, like I said, I need those deeper pullbacks. So, and then other than that, I think the only other one I had was DAX. Yeah, I'm keeping an eye on the DAX. I know it's not a currency, but if I flip over to the DAX in Germany, I do have my favorite all-time setup, which is my daily zone, and then it's actually a 1 hour that's inside of the daily. So if I go down to a 1 hour, so it's.
I used to trade the DAX a little bit back in the days. I think around about 2014. Jeez,
you used to trade a lot of DAX.
A little bit, dabbled with it.
Yeah, well, I haven't done a whole lot with it. But since
the tick size on that, like $25 or $35 or something stupid.
Oh, I don't know.
I remember right.
Yeah.
Zero.
But yeah, I mean, I may look to possibly take a stab at that. Like I said, I don't do a whole lot with DAX, but again, I'm kind of pushing just because all my currencies are in the overhead resistance points or overhead. So, yeah, just trying to find other opportunities out there. I think that's mainly it. I think the last thing is possibly Nasdaq on a 10-minute. I did have a 10-minute zone drawn up here, from that pretty sharp, support line. So yeah, if I go down to a 10-minute, that'll be a demand zone there. So that's probably that's probably about it for me, guys. To be honest, I'm planning to stay safe today, a little extra safe since everything's getting smacked by the higher time frames.
Nice. Troy, what do you have, bud?
Yeah. Let me.
I like that sigh. Is that a good sigh? Or?
No, I mean, honestly, this market is really hard.
Yeah,
it is. You can say that.
I mean, there's just no other way to kind of say that. But let's see. Let me. I'm going to try to share my screen here.
Yeah, that's why I've been squinting, trying to find opportunities. It's like if we're having to squint, this is where we just listen to our gut.
Yeah.
Yeah. So a couple of things. I believe in sequences, and so the market likes groupings of 3s, 5s, 7s, and 12s, and I can't explain that, but it seems to really like those sequences, and we just and I'm probably being a little bit aggressive here, calling that little doji a green, but I think it is actually green right there. So this would be 1, 2, 3, 4, 5, 6, 7. We've had 7 in a row. So that I'm always kind of doing, I call it the count, seeing if it's in one of those count sequences, 3s, 5, 7, or 12. Well, we just hit a 7. So to me, the probability is very high that we're going to have a down day just because we completed a 7-day run. Now, notice that there's also in that sequence 3, 5, 7, and 12. So there's certainly a plausibility it's going to continue to go up and try to make that 12-day run. That being said, if we look back in time, obviously the 3-day runs are much higher probability, right? And then each time you go to a 5-day run, there's less of them. There's less 7s, there's less 12s. So the probability continues to shrink that we're going to continue to go up. That being said, after 7, it makes me say, hey, the probability here is that it's going to be a down day to complete the 7-day cycle. So that's one thing. The other thing is that we're still trying to take and test these prior highs and have not been able to get there yet, but certainly those are magnets. They're dying to go up there and test those. And then the other thing that's I think becomes a real issue for us technical traders is that once we get above the high, we are in no man's land. So we have no resistance. We've got none. We have no resistance. We've got no volume of previous history. So we have no volume. We have no price history. We are literally trading blind. Okay. We don't know where it's going to go. So what are we going to default to? We default to what everybody does, and that's a Fibonacci extension. And that's it. That's all we have to guesstimate where it's going to go once we get into no man's land up here at all-time highs. So that is a concern because I feel like now I'm trading with less information. I'm guesstimating, where could it go? Yeah, sure, you can use average true range and there's other ways to kind of guesstimate where it could go, but it's all it is a guesstimate. And so the closer we get to that all-time high, I start getting a little more nervous because I feel like, again, I'm trading without all of the pieces to the puzzle. We haven't established any kind of resistance above. And so therefore, technically there's no resistance above. What does that mean? Can I buy the all-time high breakout? I mean, and how far will it go? I don't know. There's no resistance, right? There's no way to quantify that. So yeah, I mean, are we above the moving averages? Yes. Are we continuing to break trend lines? Yes. Are we still in this longer term consolidation band? Yes. If we break out above this consolidation band, probability is that's going to keep going, right? That's just the way the ball bounces. I am very concerned macro and fundamental because I don't see a matching. I don't see this matching those. Also, we have declining volume. So we kind of have a divergence of volume. And the volume is an issue, but at the same time, it's summertime. We expect kind of low, crappy volume in the summertime. So, I don't know how much of this is standard summertime volume, or is this just bad volume that's not confirming this move? I mean, you can literally go to there and it's declining volume through this whole move to the upside, which to me is that it's not confirming the price move. It doesn't say, hey, the market's strong. Well, it's strong price movement wise, but it's not strong volume wise, or, there's not a lot of people believing in it. If there were people believing in it, our volume would spike. So there's a lot of, I'm becoming very, I don't know what the word is, nervous Nelly. Right.
Yep.
Well, yeah, that's part of the Wyckoff theory. I mean, yeah, like you're saying, the effort's not meeting the result.
So that's one of the many things I'm kind of a cautious right here. And if anything, I'm leaning short. I'm looking for the market to say, we need an excuse to go down. And once it has it, it's going to be I think we're going to see a huge engulfing bar where it engulfs multiple days. A bar like this big bar going up, coming down. I think the market is just, it's like, also, if you look at the inventory, it looks like the big boys are selling into this. The inventory numbers, particularly yesterday, the inventory numbers were negative until the last hour. At the last hour, you got a bunch of retail guys buying the dip, and they came in and they pushed it. They pushed it a little bit, but I think the big boys are moving to the sidelines and or starting to build maybe some very modest short positions.
Yeah, I'm in the same boat with that.
That's just my gut feeling. Now, I'm going to throw out another. You guys, I'm always kind of looking at stuff that's right out there on the far edge. And I'm going to show you something that's kind of out there on the far edge. And again, you can tell me what you think of it. Let me drag this chart in here. So this is my biggest concern right now, economically, macro, whole 9 yards. This is from the New York Fed. They produce this reverse repo for overnight loans to qualified institutions, which basically means all the big boys, JP Morgan, Goldman Sachs can, as well as all banks and credit unions can access this window of opportunity for banks and big institutions. And this is where they park money overnight.
Right.
And what happens is usually the bad banks start using this on a regular basis because it's guaranteed. It's a repo. The Fed gives you their money back. There's no risk. And so what you're seeing here, this is yesterday, it jumped to a total of, and I'll scroll up. Well, you can't, it's not showing, it won't show it now, but it'll give you the details from yesterday's.
Well, that's a huge spike.
It went from, this is the dollar amount. So somebody, and they'll tell you the number of participants.
And that's in billions, right? 460 billion.
That's right. And yesterday it doubled, and you can see that it's been drastically going up the last week and a half or so, right?
Wow.
And so this is very concerning to me because this is and this is there's 62 counterparties from yesterday. Average, you can see, is down in here, and it's probably between 25 and 35 participants, or they call them counterparties. And I haven't been able to figure out if they ever list who the counterparties are, but at least the summary does not do that. But I watch this almost on a daily basis because, to me, this is the canary in the coal mine when it comes to U.S. banks and big financial institutions. If they feel that they have to move money over to the Fed because they can't risk overnight money markets, that's telling me that their capital is they possibly are having capital issues where they don't have enough capital to cover bad loans. And so that's kind of the underlying discussion. And so this is just spiked just recently, like yesterday. So this is to me, it's a major deal. I don't know very many people that follow this. And
have you, sorry, Troy, for interrupting there, compared like that sort of spikes to, let's say, the downturn previous times when we went into recession, like that housing collapse, for example? I think 2018 there was that big decline. And comparatively, go have a look at how large these spikes actually are. How big can it actually get? My goodness.
So here's 2018 back here. And you can see that they were relatively small numbers.
Looks like it goes back to 2008 is there.
You get into 2021 and you can see that it's really spiking.
That's crazy.
Really. Yeah. So, all I'm looking at is this looks to me, of course, what do we do as traders? We break everything down into a chart, right? We always look at how can I break this into a chart? So I'm breaking this into a chart and I'm seeing that it is bottomed somewhere in February and it's starting to go up. That's what I see. And I don't know, is that good or bad? I'm not sure. I'm not sure that I understand the specific ramifications of what the reverse repo thing is. But having commercial banks go to the Fed seems like a bad thing.
Yeah.
That's like going to your dad and saying, Dad, I need some money. You're going to do it, but you only do it when it's really desperate,
really
right?
Needed, yeah.
Right. So anyway, this is from the Fed website. So if you're interested in tracking this, every day at 3:00 is when they do this, and they'll tell you the details of the specific day. They'll say how many counterparties, how much. They sort of give you some statistics on a daily basis, and then overnight that information goes away and they consolidate it into this chart.
So this is them going to the Fed and getting liquidity?
They're going to Fed to get short-term interest. So they're using their assets. This is another thing. It's not cash they're giving the Fed. They're giving the Fed assets that they already own. So it's really this is sort of, they already own the asset, and then they give the asset, technically they're giving the asset to the Fed overnight, and they pay interest rate on that, and they give it back to them the next day. That's like a car loan, right? You own your car, a title loan. You own your car, and you're giving the car title to a lender. He gives you, money and at a high interest rate. And so it's not exactly it's not a perfect analogy, but the idea here is that why would we be going to the Fed? The only reason why you go to the Fed is either the interest rate is higher than, the commercial overnight, or you don't have cash. You have to use an asset instead of cash. So these banks don't have excess cash to move into overnight interest bearing, right? So they're going to the Fed so they can use their quote assets instead of cash. So if that's the case, then you're thinking, oh, these guys are all cash poor. again, that's a bad thing, right? They're cash poor. As you can see, I'm having, mental issues understanding exactly what's going on here.
Yeah.
But this just can't be good. You can't have banks going to daddy going, please lend me some freaking money, right? Overnight. So I mean, that's just my take on it. Anyway, I'm totally up for suggestions or comments. Go for it.
No, I like that. You gave me something to study later. So no,
Drop
I'm
me
like,
that link. I would like to see that too, actually.
yeah.
Look
I mean, I'm like you. I like to make charts out of everything. It just makes it easier to understand. So
Troy Tiger, I'm just quickly gonna go off mic and camera. There's someone making one heck of a noise here in the hallway outside my office. So I need to go scream a little bit. I don't know if you can hear it, but it is pretty
I don't hear
annoying.
anything.
Right, but I'm just gonna be away for 2 minutes if you don't mind. So
Yeah.
keep going.
Yeah.
Well, we could sing something so you don't miss anything.
Oh, I got a whole YouTube of singing. So
Oh, yeah. Well, in my case, that would be, you would understand why I am trading and not a singer.
yeah. Oh, I don't know if you heard that, but I did just have an alert hit on my Aussie dollar, US dollar.
Well, you wanna let me stop. How do I stop share?
Oh, I don't know. He might have to do it. Let me see if I can share and it kick you out. I don't know if it'll do it or not.
Oh, there it is. Stop screen. I got it.
Oh, okay.
Yeah, you can share yours. Anyway, and I know that last time we had a discussion, I showed you guys some stuff that was kind of weird too. But I'm just constantly looking for that outside edge, that outside piece of data that everybody else is missing, that sheds some light on either a fundamental, macro, or even a short term, that gives an edge. I'm an edge seeker for sure.
Yeah. Yeah. I wrote down what you said last week, and I wanted to also let you know, Troy, I finally realized later that day after our last stream what you were asking me about when I was talking about my scoring on my fundamental scoring. You said if it's a 3, if it's a 4, even though it's not a bullish, are you still looking at it? So, yeah, the answer to that is yes. Because I have a cool little graph. Actually, I can show you this real quick if I can. Do I have to? Oh, hold on, my mouse quit messed up. Hold on a second. Oh, there we go.
I'm back, by the way.
Yeah, we see you, Troy. This is what I was wanting to show on my. Let me see here on my top setups history. So your question the other day was like, if I just go to a whatever euro dollar, just as an example. So like back here, June, let's go a little further back. Let's just go May 21st. So obviously a 5 or higher is where I'm interested in buying, right? But yeah, like I do pay attention as like further back in time. This is way back in whatever that was, May 30th, -5. As it slowly starts to trend up.
Yeah.
And yeah, I'm definitely starting to perk my ears up when it gets around the 3 or 4, as long as I see that it's increasing. But then obviously I don't like to pull the trigger on trades unless it's a 5 or higher. I honestly prefer a 6 or a 7 or higher, just because if I'm placing a buy order with a score of a 5, well, it only takes one negative piece of news to knock it back into neutral territory. So yeah, I just wanted to point that out, that as it starts to go in the favor of a bullish, or vice versa, if it's going bearish, then yeah, I'll keep an eye on it. So anyway, I just wanted to.
Oh, that's a great clarification.
Yeah, because you asked me about that, but my head wasn't wrapping around the question. So anyway, I'm gonna flip back over to my chart, Richard. While you were gone, I did have an alert hit.
Nice.
On the Aussie dollar, US dollar. So I just want to take a quick look here. This was that higher zone. Okay, so let's just take a look here. Yeah, I mean, it did technically hit my demand zone on a 15-minute, as you can see there.
Mm-hmm.
So yeah, even though it's hit my zone, I don't want to just, look at that volume though. The volume's spiking real hard.
Jeepers.
So what I may end up doing is obviously get if I can get like a 15-minute, finishes bullish on the 15-minute, give me the engulfing, give me the tail. That volume is spiking pretty good. So yeah, I'm just going to, in the background, prepare on my broker.
Right. Yeah, we also had that JOLTS numbers that came out.
Yeah, I think that's what did it. What was the update?
Probably 7.77 million versus forecast at 7.32.
Okay, so yeah,
slight increase there.
Yeah, so then and then the ISM manufacturing was a 69.7. That was pretty well neutral.
Yeah.
69.6. So yeah. So good for the dollar, which means as far as my trade goes, it should spike down. If I look at let me flip over to this chart real quick here. My Eco Surprise meter. So obviously the US dollar is showing me a 46%. The Aussie dollar is less though, at a 40. But on my top setups, Aussie dollar, I should be getting, right there. So I am getting a bullish score of a 7. So yeah, while you guys are chatting, I'm just going to wait and see if I can get a nice little bullish candle finish on a.
Let me know if we should switch back. And,
is that a third-party service that you're subscribed to?
Yeah, it's something I'm not affiliated with. I've been searching for something for 10 years, a way to keep track of all of the fundamental and sentiment reports as they come out, meaning the COT report and the retail sentiment. So there's some guys in Atlanta that they're just like computer nerds, but they've essentially created an algorithm to track all of it. So
nice.
Was that on your direction, Tiger? Did you ask them to do that, or was it something?
No, it was something they'd done, and I just found them on YouTube.
Also,
they've got their own YouTube channel, and I just found them and started following them and started using their tools. So,
right, gents, I'm going to quickly do some analysis, or I don't really have much to look at, to be honest with you. But let's first look at crude oil. Maybe just crude oil.
Yeah.
Let's share that. There we go. Did it pop up your side? Yeah.
Yes.
Well, I'm just looking at a weekly on crude oil. I mean, after that, I don't know, ceasefire, price came down pretty hard. I guess I was with you guys when that happened, right? I think I was with you, Troy. Mm-hmm. So really, from a fundamental aspect, I don't really know which way crude's going. I can just go and draw some lines on a chart, try to do some technical analysis, maybe look a little bit more into the market geometry side of things, play around, and if price has been stuck in a range going sideways since I dropped, perhaps wait for price to break out of it and then see where price technically could potentially go. So what I got on here is basically a pitchfork setting sloping downwards, and I played around with this using different anchor points, especially for my second and third anchor point, and also the setting itself. I decided on a shift just for visual reference. You can see that price has been bouncing up and down this upper half of the median line. So center median line, upper median line, respecting that upper median line quite well for quite some time. Something I found interesting, even this recent spike that we've had up to the upside, and obviously that heck of a decline. When you work with market geometry, they quite often will tell you as below, as above, or as above, as below sort of thing. So if you run, let's say, just a channel parallel to the angle I'm using here, and look at this section where price actually undershot that center median line, and you project it to the upside there, then it overshot that upper median line by almost exactly the same distance. Obviously, looking at a weekly here, I just thought that was interesting. This is a weekly. So if I drop down to, I don't know, let's go to 15 minutes. price has been stuck here since that heck of a drop. I think it's about a $3 range. The low to let's take that high, plus minus $3, right? So yeah, personally, good luck trying to trade in this chop. Just look left. It's nonsensical, up, down, sideways.
Mm-hmm.
Price changes around on a whim. So it's not a market I want to basically trade until, let's say, price breaks out around where we had this triple bottom formation, and then see where price could be heading towards. If I go
You
back
think
to
it's
that,
it's just going to go sideways till the July OPEC meeting?
could be.
Because they keep threatening to add more. I keep reading that they're threatening to add an additional 400,000 barrels in
I've
addition
heard
to what
that.
they.
And it might actually do that. I mean, crude oil's like gold sometimes, and we get stuck in ranges freaking for ages. I'm just trying to formulate a trading plan here. If price were to break out of those ranges, where might my next sort of intraday trade be? And could potentially just be this dashed 50% median line over here. Since price has been respecting these angles pretty decently, currently below today's current weekly low. If you had to go lower, obviously, it's around 62, 68. Also important to know, this week's obviously not done, so we might get a pretty large fair value gap to form here, and that we'll only know at the end of this week. Should price, however, move upwards, and let's say, I don't know, something happens again with this war, and Israel and Iran and America that got involved, then potentially a move up to the upper median line again. And that's actually a fair distance away. So what I'm really trying to say is, who knows, right? What's going to happen? Are they waiting for the next big OPEC meeting, or is something going to happen over the weekend like it tends to do these days? Someone going to tweet something?
Yeah, but I think you're underselling your work here. Honestly, because what we need, every trade should be an if-then statement.
Yeah.
Right? And the
so
process
I've got alerts on my other platform below that little range, and get a breakout, maybe with some volume and follow through. That is a plan I have. At least, where do I trade towards? So if this happened, then that sort of thing. So you're 100% right, Troy. But it is frustrating when things are trading sideways, and I've learned, just stay away.
For what it's
$2 range on crude oil it's actually quite tight. I mean, it sounds a lot, but I mean, crude oil can give you huge ranges, right? So it could break out of that range just like that, and then at least you've got a game plan to work towards. And again, the importance of maybe not being stuck or done the analysis beforehand. You have a plan, and go set your alerts, and don't get stuck staring at the screen the whole time. It's pretty much my game plan at the moment. Because things go anyway, right? So where's it going to go to if this happens? So to the downside and same to the upside. So,
for what it's worth, it's showing a -2 on my screener. Oil is
the what?
On my fundamental screener, it's showing a -2, so neutral, which is basically what the chart's telling us too.
Yeah.
What about?
I don't know, Troy. What are you thinking there about the Nasdaq? Because you do trade intraday, right? Scalping. Have you traded today yet, or are you also still a bit on the sidelines at the moment?
I try to stay on the sidelines while we're in a session, only because I can't do. I'm not a multitasker. I can't trade and talk or pay attention at the same time. So, but that being said, the Nasdaq to me is it actually nipped or came very close to nipping the all-time futures high yesterday.
Yeah.
I think the Nasdaq is it's kind of in a place where we're scared. We're scared because AI is just driving everything, and so and the AI outlook going forward is extremely bullish, right? And so I think that that's sort of driving the underlying. But at the same time, the S&P has not been as strong. So yeah, I think we're very toppy in both Nasdaq and the ES. I just feel like we're very, very toppy, and it feels okay. And when I say feels, you know what I mean. There's nothing quantitative I can actually say. Well, it's because of this, but just like the banking thing, it's in the back of my mind, right?
Yep.
And it feels like we are very toppy, getting very close to a top. Also, there doesn't seem to be any catalyst that's driving this. Why are we going up? I don't know.
This is why I also give that sigh you gave on when we started. It's like I don't know either, because I'm exceptionally wary when we go into the, like you said, in the open. Technically, there's nothing really to work with, right? Rather than a fib extension, maybe sloping a pitchfork in the direction of this massive move we've had to the upside could potentially give us something. But yeah, it's I think every single time now during the morning, well, not single time, I just found over the last week and up until today, the AM sessions have been pretty quiet. It's not been giving much. And then you have these runs in the PM sessions, which doesn't obviously help for me.
Or when I'm asleep.
What I'm taking
when
away.
I'm cooking.
The morning session is, everybody's thought about it overnight, and they said, this thing is toppy, I'm getting out. So we have this little drawdown in the mornings, and it's fairly, it starts to feel like, ooh, this could really get going, maybe to the downside, but then it doesn't do it. It bottoms out, and the bottom feeders come in.
Huge moves you see during the Asia sessions.
Wow.
Boom.
It's almost like reverse.
I mean, there's obviously been some during the US session as well. But you get a lot of trending environments during the Asia session at the moment. Obviously, this is on a 5-minute time frame, and when's that going to change? Who knows? But yeah, extremely, extremely wary at the moment. So.
Yeah.
Asia's
all I can say.
Asia's been winning. I got to get my cat out of here. Stay out of here.
Do you trade the ES at all, Troy? I mean, obviously they move very similar, but
they do. Usually, I mean, I like to always compare them to see which one's leading. So if the Nasdaq happens to be the one that's leading today, when it breaks out, I'm going to immediately go long the ES, because the ES hasn't had time to react. Remember that the ES is 500 stocks, whereas the Nasdaq is only 100. So
correct.
It theoretically it takes 5 times more energy to get the ES to move versus the Nasdaq. Usually the Nasdaq I use as a leading indicator when I see it. That being said, if the ES says we're going up, it doesn't care what Nasdaq's doing. It's going up, and Nasdaq will eventually follow, right? And so I play those two against each other all the time, and to the point of if I see a spike in one, I may short it and look to go long in the other to sort of hedge in the short run. And what will happen is a lot of times I'll get that spike high short, and I'll go ahead and buy the Nasdaq or whichever, and one will go down. They'll both go down. I'll cover the one, and then the other one makes money. So that seems to be something I've been doing a lot lately, simply because it's so chaotic. But I got to say, I'm very nervous about particularly the Nasdaq. Nasdaq, it's got that underlying AI that's pushing everything. And so on one side, I think it's almost safer, a little bit safer than the ES right now. But if you pull the AI out, and the Nasdaq's going to just plummet. because AI,
Yeah.
and you think about Google, your Mag 7, Google, Amazon, Tesla, all of those have had huge runs. It just makes me think that, again, this makes me go back to our discussion at the very beginning, probabilities. We are going to see the other side of the probability sooner than later, in my opinion. And so, all the big boys, the Mag 7 have been going up and up and up and up. And NVIDIA, I mean, you look at NVIDIA, I mean, it's got their profit margin is like 70+%. Like, how long does it take before somebody else says, ooh, there's a lot of profit to be made there, and some competition comes in?
Exactly.
That's just
You
right.
can't always be on top, and I mean, have it be so sustainable to make that kind of profit. It's just,
And if
history tells you that, right?
Yeah, and if NVIDIA's stock price is really pushing the Nasdaq, that makes the Nasdaq, in my opinion, vulnerable.
Yeah.
71.
Yeah. It's
So,
yeah.
and obviously,
same thing over and over again. It's just like I share your nervousness. That's for sure. And I don't
Amazon,
think
Amazon. Let's talk about Amazon just for a second. I mean, tariffs are, man, those guys at Amazon must be just, sitting on nails, right? They've got to be just handcuffed to what's going on. Their whole business get turned upside down, because I think I wrote somewhere that 80% of their products is from China. If that's crazy. So there's so many little things that are on the verge or could, just like we talked in oil, all it takes is one ballistic missile going into the Strait of Hormuz, or I can't say that.
Hormuz.
Hormuz, to change the entire price structure of oil, right? And maybe we're always one step away. Maybe that's just something, but it feels like there is lots and lots of red flags out there right now. And so I could only agree with you, Richard.
Yeah. No, it's not easy trading at the moment. I can tell you that.
Tesla.
I mean, not that it's ever been easy to trade. Yeah. Don't get me wrong, but it's just,
Tesla's another one that's
tricky at the moment.
Part of the Mag 7, Tesla, and Tesla's gotten the crap knocked out of it because Elon
in his tweets.
Elon said, "Open mouth, insert foot." right. Yeah. And so, and the question is in the U.S., obviously, our news cycle is so short that we've already forgotten about Elon, right?
No.
right. But it seems that Europe is not letting go of Elon. I mean, every month it's double, triple digits worth of declining sales in Europe from Tesla. So Tesla, another Mag 7, it's got headwinds, big time headwinds.
There's a little bit of geometry for you on Tesla.
I was going to ask you, so what are your thoughts on the pitchfork? Is it mainly the weekly time frame? Is that where you use it?
Yeah, no. I'll use it especially over corrected patterns. I do find, if you think let's say you're in a trend, it could be any time frame really, and you think you're starting to deal with a corrective move that goes obviously against the trend, I find pitchforks to be extremely helpful with that, because they typically terminate, or corrections typically terminate at one of these median lines before price resumes again. And because, let me just get my drawing tool out. Let's say price is trending higher. Your corrective structures are typically more flatter, right? They're not at a steep angle like your trend would be. Now, the shift pitchfork setting, I find extremely helpful to try to figure out where a correction might potentially end. Now here, obviously, it's very easy to say we probably had here an ABCX, ABC, a double zigzag, because it's in hindsight. But on a double zigzag, you'll go to the XY wave and probably flip that to a shift pitchfork. Yeah, and look at that. Price terminated at the red warning line. So at a specific angle that was, I won't say determined, but it was started off at the start of the corrective pattern. So if you also look at corrective patterns, start studying what corrective patterns look like, then it becomes very important when you use pitchforks to use the right anchor points. In the case of an ABC or zigzag, that's your most common corrective pattern, right? Some might call these flags or whatever they want to call it. Zigzags, ABCs, or whatever. So you want to anchor your pitchfork at the beginning of what you assume is the corrective move. Second anchor point at an A, B. This now is going to move lower, and price will typically terminate at one of these lower median. Now, if you have a combo wave like this, obviously in hindsight now, guys, look at this. If this was just an ABC, it attempted to finish there at the shift pitchfork. Didn't do that, and it broke down lower again. As soon as that happens, in my mind, you need to start shifting your idea that you were dealing with an ABC. It failed to move to new highs, then your next assumption should be that it changed into a double zigzag. And that could be a move higher.
Yeah, that's a geometry person's
very useful on longer time frames, and especially you don't have to go redraw things all the time. I mean, I'm drawing here on Tesla. We don't even supply Tesla yet at Hola Prime. I think it's just interesting to see how prices typically, especially when they stay in these bands, they make for really good targets. Dynamic targets, because obviously the angles are changing and time's passing by, right? So the more time is passing by as price moves up, in this case, this angle would get higher and higher and higher. So they can make for really, really good targets as well. Which is pretty much what I've done here, or what I did on crude oil. So if it breaks out of that range, where might price be going to? If this, then that scenario type of thing. But anyway, that's my 2 cents worth.
So do you use the when it comes down to one of those levels, do you use that as a trade location, or do you use it as more generally as I'm getting into a range where we could see a reversal or a bottom or a top? I mean, are you using it specifically like a that exact point is the trade location? Or do you use it loosely as a range? How do you implement this into a specific trade?
This is not a great example, but let's assume price was doing this, right? It didn't do that, obviously, so forget about what happened here, but it's making this sort of zigzag behavior towards... Come on, I hate this tool sometimes.
Yeah.
And as it approaches, let's say, that lower median line here, then what I want to do is slope a pitchfork in the direction of what I assume is a corrective wave. Right? Again, disregard this price action. And quite often where you have a confluence of two angles sloped in different directions, one tracking, for example, an uptrend, and the other one tracking what you assume is a downtrend, then quite often where they intersect makes really, really good areas to attempt to trade. If you're trading long-term to try to swing maybe back to the upside, or at least have a run or bounce high, depending on what time frame you're looking at, that could last for a few days or so. So you want sort of like an X marks a spot type of vibe. That makes sense, right? And again, I used to do this on smaller time frames, and I just don't find it as useful as the higher time frames. But if you can do this over a few markets, set alerts. I mean, these days you can set alerts against these angles as well. And if you can't do that, then just run a ray at the same angle and set an alert against that. And if price hits it or gets very close to it, then, do that over a few multiple markets and it can give you quite a few trading opportunities. But there obviously a lot of subjectivity involved in drawing using market geometry. Sometimes it's best using the close of a candle rather than a wick. But, trying to teach this to someone, you're never going to have the same sort of results. It just comes with years of experience.
Yeah.
Right.
And it's a very visual tool. You need to go back and, although this all happened in the past and you're only drawing this right now, if we undershoot this area, we might come back to the same angle where it undershot that area, for example. That makes sense, right? As a target. You can run, for example, obviously these highs overshot a little bit there, but it's sort of the same area where resistance came in. So these angles is telling me that the market's respecting those angles to some degree. And they can be useful in determining where price might be drawn towards, where might support and resistance come in, and obviously also give you trading opportunities.
And then, like earlier, Troy, you were talking about not having any information above the tops where we're currently at. Because I know you said using fib extension levels to potentially, look at some of those reversals. So could you use this as well? The pitchfork as
I want to show you something on the Nasdaq, but where is that? I've got the Nasdaq open here, but this is now a continuous chart, and we had this discussion last week, I think it was, Troy, about obviously looking at the current front month versus a continuous contract. But just from a geometry perspective, if I go here and with the data I have since this dinosaur over here, and I go run a pitchfork using the three most prominent anchor points, in this case using a standard pitchfork setting or your normal Alan Andrews pitchfork setting, and you slope that to the upside. Let me just hide that for you, and then you'll see what I mean. Visually, price has sort of been jumping up and down between these median lines until some stage where it actually broke through it, retested it. Now, what a lot of traders don't do, and they think now these angles aren't useful anymore because price is broken above them.
We're only seeing your 1 minute chart. We don't see your. We're not seeing your pitchfork. There you go.
There we go.
There we go. Thanks for pointing that out. All these buttons I have to push. Let me start again. So I ran a pitchfork here on the Nasdaq, continuous contract, three most prominent anchor points, and I mean going back all the way here till 1999.
The dinosaur.
The dinosaur, before the dinosaur. And you can see that price has sort of roughly, bounced up and down between these median lines, and then obviously it attempted to go above it some stage, and then finally here in January 24 last year, broke above it very, very strongly, right? So if I have to bring back, and this is, just getting back to what a lot of traders would do, I think this pitchfork's not useful anymore. But what I like to do is you go double it up. So you use the same pitchfork, you copy and paste it, and go position it above your original pitchfork.
There you go.
And those can also act as really good targets.
That's innovative.
Yeah.
It's crazy how accurate it can be.
Yeah, but it's like, so if, for example, I'm thinking if the Nasdaq actually moves lower, where's it going to go towards? For me, at this angle that it broke out of, maybe pull back, that could be an area of support. Maybe that could be a trading opportunity. If price moves lower, if I want to buy it, or if we start seeing a bit more of a sharp decline, let's say today. I think it's currently happening actually, or over the remainder of this week, then that might be an area that price might be moving towards. And if it does hit that area, do I want to be shorting going into it? No, I want to know where that level is, and rather maybe use that as a potential area of support, heading it back to the upside.
Yeah,
As we look ahead here, and again, this is the continuous contract here. We on a continuous contract at all-time highs, where we're actually not on the, I believe, well, you're looking at real-time data there as well on what's the September contract. Then we've got 23,207, which are basically just market geometry lines. But this is so far away. I just don't know. I don't think it's got the legs to do that. I don't. I feel the sentiment with Troy there. I'm pretty nervous. Anything can happen. I mean, we talked about this. The market stay, I don't know, irrational longer than you can stay liquid.
Stay solvent.
Solvent, sorry. But yeah, tricky. It is very tricky. But maybe we're just waiting for I don't know, for the weekend to pass.
Well, I think that's what a lot of
people on holiday, an early holiday with July 4th, and we'll see when these when they're going to decide on the tariff thing again next week, wasn't it?
9th is the 9th is the deadline. So yeah, it appears that way. It appears that's what a lot of people are doing, just staying on the sidelines.
Yeah.
Which I'm staying on the sidelines with this trade idea I was talking about, the Aussie dollar. It's just during our session we got those couple news events, the red folder events. So that's keeping me out of that Aussie dollar trade, but I'll show you just how, if you want me to switch to my chart.
Yeah, please do.
Yeah, I'll just show it quick.
Swap over there.
I just got set up with my account last night.
Oh, nice.
Yeah. So
what's that? The DX platform.
DX, yeah. Well, yeah, C-Trader's not available here in the U.S., so I couldn't get that one. Which I kind of wished I would have, because I noticed that it's got the level 2 data on there. That would have been cool to have, but either way, not a big deal, because I personally ain't much of a scalper, so it's not that big of a deal. But yeah, I mean, just goes to show that alert I had earlier. I mean, it's hitting nicely. You can see right there, it just wicked right in, and it's bouncing to the upside. Got a little bit of a dogfight here with the traders, but yeah, look, this is important for everybody. Just always make sure you know where you're at on the daily calendar. I mean, obviously, with everybody flapping their lips, especially the Fed chair for the U.S., which affected that. Obviously, the PMI, the job openings report. It's just going to be a little volatile for a little while. Give it a couple hours, it might kind of simmer down a little bit. But yeah, it just goes to show. Even though I had a pretty decent looking trade set up from a technical perspective and a fundamental perspective, I'm just going to stay on the sidelines. Plus, I wasn't the most thrilled with that. It's only about a 5 pip or 5 or 6 pip zones, real small. Artificially adding in the stop loss a little lower. Yeah, I just got to stay away from it. So that's just my way of staying safe, along with everybody else right now with the news catalyst coming out.
Yeah, I wouldn't be surprised if the remaining of the week's going to be pretty quiet, right?
Yeah.
Well, we should start seeing volume cut down the closer we get to Friday.
Yeah.
Okay.
Usually, Thursday is usually a horrible day, volume-wise, the day before the holiday. It's too easy to take Wednesday from Wednesday on off, so you have a nice long weekend. And, so you see Wednesday, Thursday before, or the 2 days before the holiday, you see contraction of volume, which doesn't necessarily mean you can't have huge price movement, because that just, lack of liquidity increases the potential for price movement. But it would not surprise me to see sideways action Wednesday, Thursday, into the weekend.
Don't the futures markets, or most of them, close at what, 4 p.m. on Thursday?
Mm-hmm. No, they have a standard close, so 5 p.m. Yeah, it's a standard close on.
Yeah, but I don't think there's going to be. Is there going to be a Globex sort of, like? Does it carry over?
Well, something closes at 1 Eastern. Is it just the regular markets, the regular stock market? Something closes at 1 o'clock. As I saw it the other day.
Yeah, I don't know. Sometimes reading the CME chart, I like to go to their website and then it spits out an Excel sheet. It doesn't make sense.
Richard, here's your put to call ratio on your U.S. oil. The retail traders are in the extreme fear.
Yeah.
So observe the masses and do the opposite. They're scared. They're selling.
Yeah.
That's I just
Well,
thought that was interesting.
Pulls up that as well. It's very cool.
Yeah, because like I said, it's currently showing on the oil. If I flip over to that,
Okay.
I believe it was commodities only. Yeah, I mean, there's pretty much your score. It's good positive info on retail. Obviously, the retail positioning, which we just saw, the put to call ratio. Yeah, pretty much a zero. I mean, it's literally a zero. So it's not a +1, -1. It's
sideways.
But yeah, you look at the retail traders and they're scared out of their wits. So
well, I would also be. Well, I am as well.
Yeah.
After a sharp decline like that, she's got no idea what's going to happen next.
So
Robert, good morning. I don't know if you guys said hello to Robert.
Sorry.
Did we get a Robert sighting today? Oh,
yep. There is a Globex session on Friday. It does close at 1 p.m. Eastern.
Okay, gotcha.
But Thursday is normal hours. It closes at 5 p.m. Eastern.
Yeah. Okay.
Well, looks like Lagarde's going to need some lozenges. She's speaking again tomorrow.
Lozenges.
A lot of lip flapping. Yeah. Non-farm payroll, unemployment rate for the U.S., and some more PMI data coming out. Looks like tomorrow. It's always that's pretty well during my session too. July 4th, and then next week.
Tomorrow. Yeah, guys, just before, I think we still got how many minutes? Yeah. 2 minutes.
Oh yeah.
Any questions from our viewers? Sorry, it's been a bit of a quiet day on the trading side of things.
Yeah, very quiet.
A lot of news and stuff coming out. The Nazi is coming down a bit.
Nasdaq. Look at that.
But then again, 5-minute chart this, right? So
yeah, getting a pullback, huh?
Yeah, getting a bit of a pullback.
All right.
Where's it going to go to? Who knows? But unfortunately, we have nearly reached the end of our session. Robert, hopefully you enjoy the rest of your day. I know you watch the other guys during work hours. Hopefully you don't get into trouble with that. Not like Tiger that's trading.
I was trading during my sales job. We had to make about $120 a day selling ADT home security.
So you knew you had to do something else.
Yeah.
Early on.
Yeah. No, my manager was just the coolest ever. I mean, she's like, as long as you get your work done, I really don't care. Because I was doing a lot of sales at that time, so there wasn't a whole lot she could sell. It's not like I was struggling. I was one of their top salesmen. So she said, whatever, just don't make it obvious if the big boss comes around.
Oh yeah.
But
oh yeah. All right. Tiger, I think I'm on with you again tomorrow.
Yeah, and then I think Megas. I think she
Michael.
said.
And then you're on 11 till 12 on Friday.
Yeah. Yep. That's
Cool, man.
it.
All right. So I'll see you tomorrow. Troy, I don't know when you're on
Yeah.
again.
I'm on tomorrow.
Awesome. We'll see you then.
They're trying
Thanks
to give
so
me
much
as
for your
much
contribution.
time as possible before the futures kicks in.
Yeah,
So
definitely. All right. Hundreds. Guys, thanks so much. Enjoy the rest of your day, what's left of it. I'm going to shoot home. Yep. And yeah, enjoy. Thank you for
All right.
everything. Cheers,
See you
Robert.
tomorrow.
Have a good one, bud. Take care.
Enjoy.
Cheers, cheers.
Hi, everyone.
Hey.
Hey guys, can you hear me?
Yep. Good to see you, Walter.
Yeah.
Hey Paul, good to see you. How are you?
Well, you know,
Can hear you. Awesome.
I'm as good as a green or a red candle, whichever order that is.
Well,
What about you
hopefully
guys?
it's a green candle for you today.
You can hear me loud and
How you
clear?
doing, Michael?
Yeah,
I
we
can hear you,
got.
Michael. How you doing?
Right. So, welcome to the session then. Who's Walter? What have you been up to? Have you got any setups your eye on this week? What's going on? Obviously, I saw you yesterday. How
Yeah. Yeah, I mean, of course, you know, it's I'm already done for the day in terms of trading wise with gold. But there is something that I'm eyeing up potentially on Bitcoin, potentially gold as well. But wait, let me just share my screen.
Yeah, please.
How you doing, Michael, by the way? Are you still in South America?
I think the delay
Okay, so
probably
now it's
answers that
working
question.
fine. I'm in Mexico, but yeah.
Ah, you're in Mexico. I see. I'm in
Yeah.
Indonesia, in Bali right now.
Oh, wow.
How is it all up in Mexico?
Oh, nice.
Yeah, it looks like there's a little bit of a latency going on here. All good. All right.
So,
So with regard,
so what we're looking at? What's this?
right. So this is gold. So in terms of sort of like just following through from yesterday, because yesterday my bias was essentially bullish up until price traded into sort of this daily high. And obviously I mentioned as well that price was potentially going to oops, 1 second. I need to move over my keyboard. 2 minutes. There we go. Yeah, and I mentioned essentially that I was anticipating the market to trade into that 4-hour equilibrium, which is pretty much already done. So today for me, I went long earlier in the Asian session. It was a very obvious long because basically coming from yesterday, if you remember last night's session, Paul, of course, we're talking about how the market was going to break above this 4-hour high, right? So this was the initial target that we had in mind. And when I say we, of course, I'm referring to me. Yeah. Anyways, yeah. So price basically broke above that high, and then obviously traded into the daily buy side target. So going into this morning, it was a simple break continuation trade, where the market basically gave a break above this daily high in the Asia session. And then my setup is exactly the same. So I simply just went long at the order block, and then my stop went below the low. And with this case, I definitely did not anticipate. I just took a 1 to 2 on this trade because essentially I was aiming for price to get to the H1 BST from a few days ago. So to mitigate against this previous bearish order block, as well as trading into that 800 EMA. So that 800 EMA acts as an area of sort of dynamic resistance for price. So I was anticipating the market to essentially trade into this previous bearish order block that wasn't mitigated as a final target for today. So I just aimed a 1 to 2, nothing crazy. But as you can see, the gold market continued rallying. Yeah, so it's like, so how many R's did I miss out on? I missed out on what, another 3R. Of course, I didn't miss out on anything because that was never part of the plan.
Exactly.
Right? It's only missed
Right.
out on if I planned for it. But yeah, so the price basically kept on rallying, and it's now taken out obviously this previous H4 buy side target that I had marked out last week Thursday. Essentially, just to keep it short, the market has wiped out last week's liquidity. So if there were any long-term traders, for example, that were trying to hold a swing sell position from last week and they maybe got into a position somewhere in this range, the market is completely undone whatever bearish move it did from the end of last week going into the start of this week. So this is a nice bold clearing move, which is fantastic. And also the bigger picture of this is an AMD model. So you can see that. So if I just mark this out, so you can see this is the accumulation phase of the AMD. Then you have your manipulation, and then after the manipulation, we have a distribution back to the high of that accumulative range. So this is essentially, in all aspects, this is a complete market cycle that is now taking place. So what am I anticipating tomorrow? Essentially, so today I do see a potential of New Yorkers. If you want to trade, you are just going to be taking the leftovers of the day, and the leftover is going to be trading that bearish correction to the downside. So essentially, the market has delivered a break of structure on the bearish side right there, right? And then now what I'm waiting to form. So this is like that initial leg that I like to wait for, that initial point. What I'm now waiting to form is the next swing low, which would form within the next, let's say, 15 to 30 minutes. After that swing low forms, that would obviously give the indication for a short setup, because then what I would do is I'd simply be looking to take a sell trade from this bearish order block with the stop going above the high of the order block. And then again, I'm just going to be looking to take this trade as a mini. Again, like I don't see price trading all the way back down until tomorrow, maybe, because I'm anticipating this week to be a bearish week. I'm going to explain why shortly, but this is just going to be like a 1 to 1.6, or even potentially a 1 to 2 to this prior low down here. Like that's the major move I'm expecting in New York. But the reason I'm anticipating this week to be a bearish week is very simple. If I go to the daily time frame. So what I mentioned a few days ago, again, is that the general flow of liquidity that I trade, which is very simple. Market goes from buy side to sell side to buy side, vice versa, and just keeps sort of ping ponging within that range. So we've seen the market obviously took out a major sell side pull last week Friday, and after that we've now seen the market has now traded into not just the buy side at this fair value gap that was created at the close of yesterday's candle, but traded into this prior high as well. So we've seen the market has taken a massive sweep for buy side pull, but in so doing, it's left quite a lot of unmitigated zones. So this very sustained move has left a major imbalance in the market within this range. So usually that's an indication the market could be looking to swing back down in that direction at some point in the near future. Price is just sort of seeking as much liquidity as it can to the upside, which hopefully, if it is captured what it needs, then over the next few days, we should begin to see a decline. So tomorrow, for example, will be a sell day. So I'll be very interested in looking for a sell opportunity because, again, the market did not come down on Monday and leave these equal lows for no reason. It didn't just randomly do that, right? So these equal lows are there to be purged and destroyed at some point over the next few days. And the question is, are we going to get a trading line with that move? So that's something I'll be keeping an eye on. So the moment the market begins to sort of angle to the downside, I will be looking to sort of capitalize off sort of the downward momentum into these equal lows, because it will be taken out eventually, right? Does anyone have any further input or addition to this?
Super thorough.
Yeah, super. I like how you went over the accumulation, manipulation, distribution side of it. I was actually in gold shorts last week. Since I'm a day trader, I wouldn't be holding it. When I grab the screen, I'll show you where actually was in it. But yeah, awesome description of what happened, because I saw it the same way.
Amazing. Yeah, I would love to see how you break down the charts, Michael. I think this is this is the first session we've had together. So yeah, it'll be awesome.
You're in for a treat, then, Walter. You're in for a treat.
Do your magic.
Yeah.
But yeah, I mean, anyone that swing trades gold, in my opinion, is a crazy person. Unless you're swing trading to the upside, which but even so, it's like if you're a hedge fund, you have a couple millions to just leave without needing over the next 10, 20 years. Fantastic. Then swing gold to the upside for all I care. But if you're a retail trader and you're sort of trying to swing gold, then you're gonna get swung in a process, that's for sure. But yeah, on that note, I shall hand it over to I'm not sure who wants to go next, Michael or Paul.
Oh, Michael, go for it,
I can actually. Yeah, I'll show you actually what happened on that exact setup. I'll be honest, gold for me is one of those pairs I have to kind of really watch, because man, this thing can run.
Yeah, it can. And that's why you gotta love it or hate it.
Yeah. Yeah, it's definitely a love-hate relationship for sure. So yeah, since this is our first session together, I did want to kind of break down like what I trade, which for me is the market maker cycle, and pretty much what you mentioned, that accumulation phase, manipulation, and distribution. So I pretty much like to take these moves when it looks like this, and typically it's that break and retest, and I want to be in somewhere after that retest area, right?
Right.
So I'll just scoot this over a bit here. But yeah, literally, when this happened last week, right? For me, once I see this 5,200 cross, because the white EMA is the 200, and then the blue one is the 50. So once we got this 5,200 cross here, my next move in this cycle is I'm looking for M's or W's. In this case, it would be an M, right? So I didn't take this. This occurred, I want to say like at 5 o'clock or something. So this wasn't the move to take. They just kind of ran with that one. But this move, after I get the M here in what I would call level 2, my next move is looking for that bounce off the 50 EMA. So we had this kind of shoulder, head, shoulders pattern, and it kind of dropped here. Now for me, this was a perfect setup. And they've been throwing a lot of what I would call head and shoulders patterns lately, especially in the past, I want to say like 3 weeks. But I literally grabbed this trade. Where were we? We were shortly in here. Where were we? What did we take this? Oh, you know what? This was actually in Asia. I took this trade in Asia. Because once I seen this kind of starting to set up, I can't take this. I don't like the swing trade into the next session. I'm not into paying the swap fee. And then for me, I also need the 4-hour confirmation as well. So the 4-hour didn't confirm here just yet. But when it came over here, like shortly after this, now this was more of my style. Right. So once this closed, it closed below this 800 as well, because I don't want to take it when it trades before it, because it can easily bounce off of it. But yeah, this was pretty much my move on here. So nice, just risking one to make $1.40. So nothing too huge. And just how you said, of course it goes down further, right? But that wasn't my move. My move was just to this blue tracer here, which is the previous day's low. So that was my target.
Yeah.
Yep. And of course it ran right into it and kept going. But yeah, this is more or less what I would be looking for. And just how you mentioned, this thing just ran the other way afterwards, right? So when I saw this, I'm like, whoo, I'm glad I know we don't swing them anyway, but this is exactly why you can't, if you swing trading, like you said, gold, you can see something that I have not been able to see in my entire career.
Yeah, 100%. And there is a time and place for swinging gold. There is definitely a time and place, but like that's when gold is sort of like pushing to the upside. But then even so, you gotta know when to get out. And by the way, you trade Steve's method. You're the first trader I've seen in a long time, because this is like the first system I learned to trade 7 years ago. I actually started off learning Steve's method. And then I picked in like a lot of like the 800 EMA, for example, like that came from this strategy. And so that's why till today I still utilize the 800 EMA, because it's the most reliable EMAs out of everything I've tried. Even the TDI, like I removed the TDI from my charts only like about 2.5 years ago, because I kind of just learned to see certain things on price and sort of had no need for TDI anymore. But man, the TDI was such a powerful indicator. Well, man, this is so refreshing. I feel like I'm speaking to an alumni right now of the same.
It is. I tell everyone all the time, like Steve Morrow and Car Chin, they are my mentors, right? So I learned everything I know from those guys, and obviously over the years, I've added little filters to it. But yeah, purely trading, market maker structure, and price action. That's it.
Yeah,
And like you
that's
mentioned,
awesome.
the TDI keeps me out of a lot of bad trades because for me, I need the chart
Yeah.
and the TDI to agree. And if they don't, I just can tell it's not ready yet. Because when they do agree, that's when the trade pops, right? Like
Absolutely.
super high hit rate. But yeah, this is exactly what I trade. It's the market is Steve Morrow.
And to what you were saying, and both of you were saying at the start of the session with regard to you got out as per your plan, as opposed to, oh, look, it's going up, I'm just going to wait, right? So you followed your plan. And obviously we all have an emotional reaction to that. But this chart, my Doge trade last week, done exactly the same thing. It comes down, nails the target. I get out a little bit before it, but then it reverses right back to where I got in. So you do have to stick to your plan, people, right? Don't feel bad just because it's gone up an extra whatever 20%, because those people who maybe held it, they're probably in a bit of a pickle right now, potentially, right? So listen to these guys, right? Get out, take profits. You always win.
And that's a great point, right? Because I always like to look at it. Just how you guys said, you didn't miss it, because a newbie would confuse the fact that, oh, it hit your target, but it went further. They would mistake that as they missed it. But in reality, you didn't miss anything. Like, you actually hit it right on the head. This part where it went further, you can't predict that move, right? Like, even if I was to move this down, right? So it was smart of me to target yesterday's low. But if I went past yesterday's low, where am I really targeting? Like, there's no way to really tell that. You know what I mean? Like, it's just not smart to try to.
You're crossing your fingers, but what are you waiting for? It's like you're just waiting to get stopped out, right? You're just waiting to lose your profits. So you're just sitting there like a dummy at the scene, just like, oh look, oh hang on, what? Oh no, and it's that. I hate that.
And then that's when you become a degenerate gambler.
Yes. Yes.
That is the path to being a gambler, you know.
You
just have to know when to get in and when to get out.
Before you can be a degenerate gambler, or can you just skip straight to degenerate gambler?
I don't know. It's like, gambling is a degenerative behavior. So the moment you're on that spectrum, the degen mode begins.
So that's an
anyone paying attention who enjoys casinos, we're obviously just jesting. You're good people too, right?
Right. It's like,
in the crypto world, people own that degen label. Okay, they own it. It's like, yes, I'm a degen. Say something about it.
Even the meme coins and stuff like that, same thing.
Oh
like,
yeah,
no,
hang on. I was trading a meme coin last week. Just come on, lay off. Just lay off.
It's okay, Paul. We all know you're also a degen. It's okay. It's we're not yet throwing labels around. It's okay.
I will carry the label with pride.
That's hilarious. Sweet. So cool. I actually took this yesterday, CAD-yen, right? It's pretty much same exact setup, right? Now, this was the cool thing about this is I actually put this up just to kind of show. So I marked this up already earlier today, right? So here we got this 5,200 cross. Once the 5,200 crosses, I know I'm in level 2, and I'm looking for M's or W's off the 200. In this case, M's. I actually took this trade. So this first one, this over here does not count. Reason being is, for one, RSI line is outside the band, and 2, the market baseline is below the static. So this here is nothing. But if you look to the next one here, you got this perfect M, right? Now, I actually caught this in the session on Friday with the guys, Eamon and Sam. I grabbed this, and I'll show this first here. So I literally took this trade twice. Typically, if I have to take the trade once the candle closes, right? But I only take half of it. And then I'm waiting for a small pullback, which, as you can see here, this pulled back nearly perfectly. And when I tell you guys, I was in this trade, the first position was 40 minutes. Believe it or not, the second position was 4 minutes. 4 minutes. This trade literally went from here, ran down, and smacked TP in 4 minutes.
Whoa,
and let me see. I'm going to pull this up, actually. But super easy trade, right? And what I know from the cycle is, right, after the M setup, the next thing I'm looking for is a bounce off the 50, which will be, for me, is called the money trade. Now, this is a little bit different because typically the money trade does not touch the 200 EMA. But if it does, it transforms and from a money trade into a combo trade. Why? Because it touches the 200. I took this trade last night at around 9:10, somewhere around there. And I typically don't like to take trades and go to sleep, but I did it yesterday because it was a high probability that this would bounce off of here because that's the next move in the cycle. Let me see if I can pull this up. Yeah, okay. So let's look. If we look at this trading journal from Friday, Cat Yen, was this Friday? Yeah, Friday was the 27th. Is that right? Yeah, Friday was the 27th. Cool. So if you check this out, I opened this trade at 125, right? And then it hit TP at 148. So that's literally 15 minutes. But if you check out this one, it says opened at 144 and closed at 148. This took 4 minutes.
That's how you do it.
Smashed it. It went from 81 to 34 in 4 minutes.
That was great. Very impressive.
Super, super solid trade. Right. So when I saw that happen on Friday, that was nice, obviously. But I was predicting my next move in the cycle would be the bounce off of here. So when I saw this close here, I grabbed it. It did pull back a little bit. To be honest, I was tired. I woke up super early yesterday. So I was tired. I took this trade and I missed my second position. So I only made 0.5% off this. Slightly, a little bit more because I think it was one for 1.2. But had I stayed up and I didn't go to bed early, I would have smacked this again with my second position, and then it would have dropped. And this, it would have been even a better trade. But coming back to it, both of these moves, once you know the cycle, right, you can take both of these. I was literally able to take this M off the 200, got out, perfect timing, TP smack. Then this came back today, right? Tuesday, so not Monday, but Tuesday, came back and grabbed the next move too, all based off this cycle. Like I say this all the time. I can't make this up. This is on the charts all the time. But seeing it and being able to execute and manage the trade properly is a whole nother beast.
Yeah. And not the truth.
Yeah.
Once you can
seeing
know
it is
what's
one
next,
thing,
it makes the whole setup and the direction, the bias. But yeah, that was pretty much it. We had a few other ones that were kind of close. I was looking at, I'll go over GU and GN really quick because I just go over those every day. These for weeks I have not been interested in at all because they have not given me what I'm looking for just yet. All right. So once this 5,200 crosses again, the next move I'm looking for is something off the 200. And if you can see, price has not touched the 200 at all yet. So I want this to come down, give me that nice W structure off the 200 and then go long. And simultaneously on the TDI, the market baseline needs to go below the static and give me that reload. Then I will be interested in this trade. But as you can see, it's nowhere near that. So this might take a few days to happen. And seeing it's a short week, this might not happen until next week. So
yes,
GU was an easy pass for me.
Yeah.
Yeah. And then we got NFP on Thursday this week, I believe, instead of Friday.
Yeah.
So yeah, this was GU, and then GJ looks pretty similar, right? Same exact thing. This one's probably is dying out because this 50 and 200 is about to cross to the downside now, and I wouldn't be interested in GJ at all at that point. Once these two EMAs cross, this is done. I would end up taking off the full markup and let that be that. So yeah, it is touching this 200, but it's not creating that pattern just yet, which if there's no pattern, there's no trade for me at least. So we did have those two, which again, I'm just kind of waiting on. And then my last one was GN, I want to say. Yeah, GN's kind of close. I got an alert set for this because it's kind of the same thing, but it's starting to fade away a bit. Now, this 5,200 has already crossed, but we do have this 800 EMA here. So maybe we can get a bounce off this and the close above, and then I'll be interested in taking it. But before that, I'm not. We do have the market baseline below the static already, so it is already creating that reload on the TDI. But yeah, we kind of got to wait on this one. If it does set up, it will more or less, for me, probably set up in Asia. So I'm going to leave this alert here. And as you can see, I labeled it as GN's W off the 200 because that's what this setup would be. So maybe it sets up in Asia, maybe not. I'm not sure, but I'm going to leave the alert there just in case it does. I don't want to miss it.
Yeah.
And I want to say my last one was GC. Was it GC? I think it is. Yes, it is. So GC was close today. And this is actually my favorite setup of all of them because this is my highest probability trade. This is what I call my master trade, right? So we got this M top. We got price run down. It does not touch the 200, so it breaks that zone. The first pull back to the 50 and then drop. Now, this is a little tight, so we kind of got to be a little careful with it. I do have the alert set here. What this trade is missing is the 4-hour confirmation. If I kick it up to the 4-hour chart, I can see that price is above this 13 EMA. And I don't take trades going short if it's above. It needs to be below. So for me, my 4-hour confirmation encompasses if I'm going short, price needs to be below the 13 on the 4-hour chart. And if I'm going long, price needs to be above the 13 on the 4-hour chart. So in this case, as you can easily see, it's not. So this is a pass for the moment. But this might set up in a little bit later. If it sets up after 12 today, I probably won't take it. I don't like to take currency pairs after 12. But it has everything else. So I'll see. Maybe it sets up. Maybe they play around and set up late Asia, London session. If that happens, I'll probably be asleep, to be honest. But this is the move. All right. Close above here. Now, this is actually nice because this does have the potential to go pretty far down. Right now, this is one target, which would be the 200 that gives you the full 1-for-1. The second target would be this ADR low, which gives you $1 for $1.75. And then that last target would be this 800 EMA. This should give you a 3.25. Now, which one is going to happen? Obviously, we have no idea. But I'm going to be there if it sets up, except if it's in Asia. I mean, London, because I'll be asleep. The TDI looks great. Market baseline is now below the static. The RSI line and the signal line are above the market baseline. Everything about this looks pretty good, except we're missing that one thing, which would be that 4-hour confirmation. So other than that, that is about it. I don't think we had anything else really. Any questions on any of these pairs or anything?
Well, I'm waiting to hear what Walter's going to say, seeing as this is his wheelhouse too, right?
Well, I don't look at FX.
I mean the approach to trading you were talking.
Oh yeah, I just have a smile on my face because it just brings back a lot of good memories as well. I mean, like the strategy I have now is basically like because I've learned so many strategies over the years, and so I trade a method that is very much suited to, particularly gold and Bitcoin, but I like I said, like there are certain elements that I've taken on with me, like the 800 EMA. The way that I count my trend cycle is also very similar to the level system used in the market maker model, because that's how I started initially identifying trends using the level system, and then I kind of like just evolved that a little bit more as I got rid of the EMAs on my charts and I got rid of the TDI, and I just followed price action predominantly. So so this brings back a lot of memories. That's why I'm smiling, man, because when you say market baseline and like even you mentioned the 50-50 bounce setup earlier. I used to love that setup. That was my bread and butter, particularly on pound dollar and euro dollar. So before lockdown, like the 50-50 bounce was such a good setup to take on pound and euro pairs. And then I don't know, after lockdown, the market kind of shifted a little bit, became really weird for pound dollar particularly. I'm not sure if it's good again, but I kind of stopped trading FX after that, and just been trading gold and Bitcoin.
So interesting.
Yeah.
So interesting.
But yeah,
you bring
it's always,
up
but you're speaking
because this.
Yeah.
Yeah, this trade.
No, sorry, carry on.
I kind of renamed it like more of my style. But yeah, this would be the 50-50 bounce. It's the first pullback to the 50 EMA after the break and retest the 1350 cross. So yeah, absolutely. Absolutely. And speaking of, since you brought up Bitcoin, we did have one more possible setup on Bitcoin. Oh, okay. So it looked like it turned around. I was looking at this earlier today, which is why it's kind of marked up now. But yeah, 5,200 cross, same exact thing. I'm looking, once I see that, I'm kind of looking for that W structure, right? So yeah, something like that. I'm looking for this to get to this level again, so I can take it long if it sets up the right way.
You may get that. You may get that.
Yeah. We'll sure see. That's it for me for now.
Thank
you.
I have a Bitcoin
so funny
update.
That you started that way too, Walter. That's hilarious.
Yeah. That's what I mean. Like, I don't think I've come across any, because I'm even surprised that system is still alive. Like, I haven't, especially recently, I haven't come across anyone that even like knows about BTMM or the system or how it works. So it's good that language is still very much alive and well.
Yeah, I mean, when Michael first introduced it to me, I was just thoroughly impressed. And I think it goes to that thing as traders. I mean, some of us find our own, we find our own style, we find our own vibe, right? But I mean, we're all on a journey, and I think eventually we all want to, the markets change, we change, and we're always looking for new things to experiment with. So at some point, I will get around to just playing in that arena a little bit in terms of that strategy we're talking about. Obviously, I'll need to put a lot of work in because it's something I'm not familiar with. But just to see, what I can take from it, right? Essentially, what I can steal from it, and the bits which work for me, and the bits which don't, like you were saying, Walter, as well. And I think as traders, it is, when people think about, I want to get into crypto, it's like, well, you need to see there's a very long road ahead of you, right? You're trading, whatever, there's a long road ahead of you, and the idea is that you're never going to be the same trader you are from year to year, because you've got to keep moving. You've got to, because your edge, like you said, like this strategy, you're impressed that it's still doing the rounds. And that's the thing. It's like sometimes we lose these approaches, and then they come back around. And I think for traders to visualize their approach like a tool belt. So my tool belt maybe has got 4 or 5 things on there now in terms of approaches and strategies, but it's not full. It's not full. There's plenty of space, right, for more strategies. And I suppose this is the benefit of having all of you in one room together, right? So But to Walter,
there's always
100%.
You want to give us your 2 cents on Bitcoin?
I mean, I'm not sure if you had anything you were looking at now, but I guess I could. Yeah, no, I mean, with Bitcoin, I'll just share my screen now. Just a bit of an update on this. I'm entirely disappointed in myself yesterday. Not only that, but I'm also I had a bit of confirmation bias, because with Bitcoin, like, so if I go back to the weekly, right, my bias was looking for a short, right? So I was looking for that long-term sell, but I was only looking to be a seller after price took out this weekly high, right? Which is still sort of like a very valid bias, right? So, but then what happened, of course, on the daily was the market had taken out this daily buy-side target. It created its initial high, and then it took out that high. So it's still like it's still basically it engineered buy side liquidity pull above this high, and after engineering buy side liquidity, it purged. Like, so when I say engineering buy side liquidity, this pull away would have sort of attracted sellers into the market, and those sellers would have positioned their stops above this high. That would have led to a build-up of stop losses, which would represent obviously buy side orders for the people taking the opposite side of that trade. And of course, you know, the market came up and then purged that high before trading back into the range. So now it looks like the seller's market is almost beginning. But yesterday, what I missed out on crucially as well, because I admit, like with Bitcoin, I'm much more actively trading gold right now until Bitcoin actually delivers. So the way that I trade markets, because when I just focus on two markets, and what this allows me to do, it allows me to be in a better flow state with them, and it also allows me to know when to step in and when to sort of like take my foot off the pedal and just wait for the market to do something interesting. So like with gold, for example, like even though I constantly trade this, I know it's not always going to be in a position to deliver good setups. Like for example, when gold trades, there are periods of time like 2 weeks ago, right? For example, when gold trades in very difficult ranges, in this case, right? So this is a very difficult range that for me to trade in, and I got chopped around in this range. You know, there were like 2-3 trades that I took where price went very close to hitting my TP, pulled back, went back to my break to my entry, and then consolidated the next day, took me out. So it's like, this is a very difficult range. And I know that with gold, I expect it. You know, there are times when it's very easy, I get the trade and nail them, and times when it's very challenging. But with Bitcoin, I also understand that there are periods of time when Bitcoin gives really nice setups especially when it's leaning. So for example, like when Bitcoin is leaning to the downside, like when it gave this sort of bearish move initially, like I absolutely destroyed this selling range, because again, it was a very obvious move to the downside and the price was trading towards a very obvious target, which was this weekly order block. It failed to retest the order block, and then it rallied back up to deliver a new high. Now, the fact that Bitcoin didn't retest this order block, it left this order block unmitigated. For me, that was a very strong indication that Bitcoin will be looking to come back down to this price level at some point in the future, right? So I didn't see this move of Bitcoin given an all-time high as an indication that Bitcoin was going to continue its bullishness. Like, yes, just like gold, Bitcoin is bullish in the long run. But like with gold, it will chop around for a while in a range before giving new highs. So right now, obviously, like I'm anticipating a market to sort of give a bearish move towards, at the very minimum, this imbalance, which is the equilibrium, basically the midpoint of this most recent expansion, right? The question now for me is, has that move already started? i.e., on the 4-hour time frame, what we've seen here is the market has yesterday given a very clear break of structure below this range. So the market delivered the initial low, gave a higher high, and then after giving that higher high, broke below the most recent low, giving a very classic break of structure formation. The only thing that was missing that would have sort of given me a bit of a confidence in this being a clean break would have been if the market had created some sort of a fair value gap as it broke below. Like, yes, there is a fair value gap all the way up here. Nice, fantastic. But this was created before the break took place. So what I would have liked to see is a fair value gap being created at the point of in which price broke structure. There is one in the 1 hour. So like if we go to the 1 hour time frame, like we do see that the market did create some fair value gaps down here, which it retested today, for example, and this one, which it retested in Asia session and this in London session. So, but yeah, my point is, I don't know. I'm not convinced yet if Bitcoin has started that bearish move to the weekly low. I'm just going to hands off Bitcoin for now and wait until a lot more confidence. But it is moving through cycles. It is still giving very good setups. Like yesterday, what I missed was the market had delivered this bearish move, retested the bearish order block, and then it dropped and towards that daily low. And then today, for example, the market gave a bearish break of structure to the downside, retested the bearish order block down there, So this is a very classic Bitcoin move where it comes back up, takes out the recent high, and then drops. Very, very classic move. And right now, the market is obviously in that extended third leg. So at this point, I'm anticipating the market to give some form of a reversal to the upside. And in 30 minutes, it's the same. The market is also in that extended third leg as well. So for me with Bitcoin right now, I think a reversal is imminent. A bullish reversal is imminent. But right now, I don't really see any sort of clear pathway to buy into that reversal yet. Okay. So yeah, so that's why I start with Bitcoin right now. Right now, I'm just a bit hands off with it. I'm observing, what am I hands off, right? Whereas with gold, I am very hands on because she is indeed my first wife, and I will never neglect her. So yeah.
Well, I'm glad you said that about Bitcoin because I'm trying to capitalize on that bounce, even if it's just to put in a retest of the previous range. So I'm glad you agree with me, because that was the premise of the trade, which is maybe going to come into play today, which you were all laughing at me yesterday because it was like, well, it's the weekly chart ain't going to happen for months, right? But it was 4 hours. 4 hour, Yanni.
Yeah.
So that might come into play. So yeah, I mean, should we have if you're I mean, that's pretty good.
I'm done.
Pretty good.
Yeah.
You have to think about, but let's just see.
No, that's nice.
See what's going on with the Google Chrome is accessing your screen. Well, no, you shouldn't be doing that. What's going on? Right, here we go. So yeah, this trade. Can you see the screen? Okay.
Yeah.
So we're just waiting for this. This is theta. It's waiting for that line to hit. And if you just go to the proper chart, this is the setup. And the idea, and you can see other people have got the same idea. The idea is just to catch a wick. And I may not get that wick, right? But I'm not chasing it, right? So if it hits it, great. And there's plenty of room for it to come down a little bit, right? So that's the idea. The setup, of course, is pretty sound. We've had a higher high, not fantastic, but there's some volume. We're below the median line on the RSI, and then we've got buyers here, buyers here. That's cool. I'm fine with that. But obviously, with crypto, we need Bitcoin to do the muscle work for us. And we're right at the bottom of the bullish context range locally for me. This is a 30-minute chart, and anything below the 4 hour 200 MA. This is a 30-minute chart, but I've got the 4 hour and 200 MA on here. That's going to invalidate the premise of my trade without even looking at the setup. So as long as Bitcoin stays above here and gives us a little bit of a bounce back into this area, then I'm fine. And then my trade might play out, and it's going to be quite a conservative. Move. I'm probably not going to wait to this order block unless Bitcoin gives me something else. I may just try and take profit to the top of this range here if I get the bounce. And I'm doing this as a leverage trade as well on a subpar exchange, not as good as Hola Prime, but I'm doing a leverage trade on that, and I'm doing a spot with Hola Prime, and we'll see if that comes into play. But again, you see this moving average coming round right on theta, so I'm not hanging around with this trade. I'll just be in, out, 3x leverage, 4x leverage, something like that, and then we'll see. But if I don't get that wick, if I don't get that touch, I'm not chasing it. I'll get in. I'll be watching it very closely for a move below this diagonal line. And if I see that, I'm out. And then at least I'll try to get out. The idea would be, oh no. And then I'll try and get out on the retest like that. That's the idea. But then the same with Bitcoin, if I can ever find the chart again. The same with Bitcoin. I'll be keeping my eye on the 400, 200 MA. I want to see it. I want to make sure we get a bounce from here. And I also want to make sure that the 50 on the 12 hour, although I think this might be the 50 on the 12, the daily. No, yeah, it's the daily 50. So I just want to see this held as well. And it's just going to be a little bit of a bounce trade. It's not really, I don't really need to know whether Bitcoin's going up or down right now. I just need it to do this. And if it wants to carry on, that's fine. If it does this and then come down, whatever, that's fine. But that's the idea. Quick in and out trade. I mean, any critique of that approach?
No, I believe in getting in and getting out as fast as possible.
Yeah, I mean, there's a few more things I'd like to see. I mean, divergence would be nice with the current market conditions. More oversold conditions would be okay, but I don't really have much of a problem trading these breakouts of these descending diagonal lines, because they do give you a nice set of buyers to just help you out if the trade goes wrong. That's the whole game. And it's this higher high, which is the most important thing. It allows the bulls to look at this as a potential area to enter for continuation, whereas setups like this, which yesterday, they're just, as I said, I'm not going to enter this one because it's looking a bit dodgy. And look, here we go. We're coming back down. It looks like we're going to lose the breakout and the pattern because there's just no volume, no interest, and we're cooking still on the stock. So it's about being very selective. I mean, people say, why have you got so many charts open? Do you not know watch lists? Well, for me, it's just I cycle through so many charts per day, just popping them up.
Yeah, I just noticed. What the? That is a lot of charts, man. Flipping. I never noticed this before. How many? You got around what, 20 tabs open there?
Yeah, it kicks me out if I have too many. But it's just because it's constantly in flux. So I'll get up every morning, as you do, at least try to, and then I'll look at, right, that setup's gone. It's not relevant. I'll just get rid of it. I'll look at the latest setups, and then they get here. So this Trump one will be in play for a little bit. It'll be staying in my tabs for a little bit because we've got a potential lower entry here, which might be a better setup. But it's just constantly going around because I need to have as many different charts as I can see very quickly in any given day to cherry pick the ones which give me the best opportunities. And a lot of people would look at like Trump coin, and they'll be looking like, all right, this is a good trade. We've had a breakout. And the reality is that, okay, so maybe they're looking at it with rose-tinted glasses. And okay, they're not really properly paying attention to the things you should, like volume, you're putting in new highs and all that kind of stuff. But one thing which will put a splash of cold water in your face and bring you back to reality is a better setup, right? So if you have lows to choose from, it gives you perspective. So everyone's like, God, I just spend Jesus, like you spend so much time charting, Paul, doesn't it drive you insane? And I'm like, well, yes, he does, but it also benefits me because I get to cherry pick setups. I mean, I'm sure Theta will just crash and stop me out now, and just to embarrass me. But this is how I operate. But that's Theta anyway. Yeah. So this is 4-hour chart Bitcoin. The way
I can feel that point of view, Paul. Literally, I don't know if you know, Walter, but I look at them all. I look at NAS, US 30, S&P, gold, silver, crude oil, Bitcoin, and all the Forex pairs. And I get on every day and I go through them all looking for one of my 5 setups. Takes me about 30 minutes probably to go through them all. And I'm looking for the best ones. I got a highest probability as closest, and all the way down to this one is super far away. It's the ugliest chart for the day, right? Like this is hideous. And I try to get the best one. If 2 of them are close, like let's say NZD USD and AUD USD, if they both look the same, I'm even picking further to see, all right, out of these 2, which one is actually closer? I would never take both of them, but I am going to take the one that is the closest. So yeah, like you just said, I'm looking for the best setup for the day every single day.
Yeah, but I mean, it seems like it's like when you're going, if you want, we live in a society now where it's like, I need this. I'll quickly just pop onto Amazon and whatever's like the sponsored link at the top, you click on, right? But the reality is, I like to shop around. I like to go and see a variety of things, especially because it helps me make up my mind what I want, right? And in trading at these days, especially in the YouTube world where everything's like, buy this quick. No, don't wait, buy it now. People forget to just, all it takes sometimes with anything in life, especially certainly trading, is just look around for a minute, get a perspective, right? Or just and a bad setup, can look even worse when you look at a good setup by comparison. It just avoids all those kind of those risks. But yeah, I mean,
it's so funny, man. It's like I really love your this like other side of things, because this is where obviously that saying of your personality will dictate the kind of trader you are. It really comes to handy, because I absolutely detest shopping around. Like I'm a creature of habit, I literally get my clothes from the same store. And let me tell you something, if you go to my wardrobe, it's not spectacular. I have just simple colors, like white pastel colors Why? Because I do not like taking longer than 2 seconds to make a decision on what to wear during the day. So I keep my wardrobe very simple. I shop in the same place. If I want a technology, I look at the same brand, right? If so, it's like I just have my go-to places for certain things. Groceries, I go to the same supermarket, you know, and and with trading for me, it's like the same. It's like I don't like taking too long to I used to in my early days. I used to trade like all the pound and euro pairs, and I had this routine where I'll, you know, in the morning, like Michael said, I would literally do my analysis and I'll select the ones that looks like they're potentially going to give a strong setup for that session, and those will be my focus for the session. And that method wore me down. It just wasn't suited for my it wasn't suited for my personality. It wasn't suited for just my way of doing things, you know. And then like I only realized this when I really boiled it down to just looking at one to two markets, and then I simplified the whole trading thing. And then all of a sudden it just clicked, you know. It's like I got a funded account and another funded account and another funded account, and that's when it really clicked. I was like, okay, it's this simple for me. Like it's like I was overcomplicating things before. I just now like my routine where it's so simple. I wake up because I trade Asia morning. I wake up, I go for my run, I go to the gym, I come home, I turn on my PC. I know what market I'm looking at. I look at my analysis. And the thing is, it's a market that gives at least one good, like 2 to 3 good setups a week. You know, so even if I have a day where it gives a really bad, shitty setup and I get chopped up, for me, it's like not a big deal because like I look at my performance over weekly and monthly, period. So I'm just going through the motion every day. I'm just like waking up, doing my journaling, doing my analysis. Is there a setup? Yes. Then I trade it. If there isn't a setup, I don't trade it. Simple as that. And it doesn't like I really don't need to overthink it. Like I literally trade on autopilot now. And as I know sometimes that might sound like, yeah, but is that a good thing? For me, it is, because I'm a bit of a nerd when it comes to trading. Like I've read so many books, I've studied so many information about the markets. Like a lot of stuff that I studied and learned, I don't really need or use it. I just love to learn things for the sake of learning things, you know. But when it comes to actual practicalities of trading in and of itself, knowledge, it doesn't equal money, right? It's good practices, a good system, and good discipline that equals the money that comes from trading. And when I realized that, I was like, okay, I need to stop complicating this and actually like just simplify it as best as I can in a way that even if I'm 40%, 50% profitable, like in terms of win rates, I'm still going to be profitable. And that's like what I'm doing now. So I found it just 1 to 2 works for me. 3 to 4, it becomes a full-time job. And then I'm just going to like spend a lot of time in front of the screens, nerding out over little things, and not actually like getting anywhere with it.
Well, you know what? I tell you what, I mean, I'm a hyper organized person, right? So I'm a bit of a paradox because I'm sure you are a much better dressed person than I am, mate, because I do stick with the Einstein mentality of just wearing the same stuff every day. Like you,
I am not I would do. Look, my girlfriend got so pissed of me wearing the same shit, she starts buying clothes for me. Like, honestly, I am not like I'm a simple guy. Like I don't like to spend too long looking at the wardrobe. I just put on whatever the first thing I look at, that's what I'm wearing. You know, and then my girlfriend, she was like just buying me clothes, like, you know, yeah, you got to try this. I'm just like, whatever, I don't care, you know, just, you know, whatever you think works, I don't really give a shit. It's not something I want to think about, you know.
My mentality is like I need to downgrade this. So if I wear rubbish clothes, it just calms my looks down because it's too much for some people sometimes.
my philosophy is, regardless of whatever I wear, I still look good. Even if I wear bad clothes, I still look good in bad clothes, you know.
Yeah, well, I don't think I look good in bad clothes, but whatever, right? You know.
Yeah, I mean, I see both perspectives for sure. Both perspectives, because as you said, some things.
Please go on.
So, like food, right? Like depending on what I want, I'm not a person's burger in town. I'm not gonna go somewhere else. Like this place has the best burger, right? This place has the best pizza. I'm not shopping or looking around for anything else. Clothes, I'm a black shirt person. Like majority of my stuff is black. I like black and gold together. That's my thing.
Oh yeah.
A lot of the stuff that I wear is the same. And I'm the same way. I'll change my shirt if I noticed I had it on for like 3 days. Then I'll change it.
Or if someone makes you aware that you've had it on for 3 days, because one thing that I really don't like are outfit checkers. People that would outfit check you and be like, "Did I not see you wear that 2 days ago?" Like, come on, why you like? How can you even remember that? I don't remember what you wore 5 days ago. How are you remembering that I wore this shirt 2 days? I don't even remember what I wore.
It says a lot about the other person, right? It says a lot about the other person.
My girlfriend will typically tell me, she be like, I think maybe you should change your shirt. I'm like, oh, okay. Well, I didn't even notice I had this on for 3 days. I don't know. I just don't care. Like, I don't have anything. Like, we talk about designer stuff. Like, I'm the same. I promise, I think I have some designer socks that were like gifted to me, like a designer belt that was gifted to me. But everything, I just don't care about that type of stuff.
Oh no. I mean, look, I hate logos. I hate any of that. I'm not a billboard. I'm not a billboard for you, right?
Yeah.
Walking advert.
Yeah, I mean, obviously this is an exception because this is my work.
Right.
This is great. It's a great thing, and I'm very happy to promote it. But like, I don't want to wear anything which says someone's brand. I'm like, I won't buy anything.
Yeah.
I was looking at like I'm moving house at the moment. I was just looking at like a duvet cover, right? And it had a brand on it. I'm like, I'm buying that. I don't look at that brand every time I go to bed. Like, what? Just what? So I end up with it. But yeah, I mean, I think it's very interesting how we all interact and how we all find our own kind of little personalities help us with our trades as well. I would encourage anybody who is trading as well to just, don't look at somebody else, don't look at us and think you have to be that, right? You've got to be right. You've got to be the shape you are, right? And you've got to carve out kind of a place for that shape, right? That's your job, right? And my students, right? I don't want them to copy me. I want them to be better than me, right? And the only way for them to do that is to play off their strengths, which is their individuality and their uniqueness. Because I have students which they just can't get on board with my approach because it's too much charting, it's too much work. They've got families, or they spend their time in a digger and they can't trade that way, and that's cool, right? But they've got to find there is other solutions for them. And so embrace your individuality, I think. And if you want to wear the same T-shirt for 2 years in a row, do it. Right?
Go for it.
Yeah. But with Bitcoin, which
back to the markets.
Yeah, I was trying to think of like a transition. Like, let's see what the shirt Bitcoin's wearing. Yeah. So there was some. I'll get better at the transitions. But there is. It's like one of those awkward newsreaders where they're like, and they're just like some horrible tragedy they've just reported on, and then it goes, but another news, and then it's just like, beans are now 30 cents. I'm like, what? Like, it's just crazy. Now we did have some talking about Bitcoin and the premise of continuation. Right? Now we did have some, and I'm still laughing at the transition. We had some hidden bullish divergence, which has now been invalidated, as you can see. Right, we previously like that, now we're like that. So the signals for, as Walter was saying, the signals for upside are fading, but they're not completely out of the realm of possibility now. But obviously, when we lose divergence, other people see that, and then that can help. That means buyers step back, and then selling activity, of course, can resume. So it's going to be interesting to see what happens. But let's just check in with my trade as well. Yeah, still, I mean, it's interesting. You can look at the rest of the market, and you can see how it's reacting to Bitcoin's latest move, right? And I shared a meme with the crypto team just this week, just to keep things light, and it was just is this kind of, maybe I'll find it and show it in a minute. It was just, so there's like a row of children, and there was just Bitcoin was the adult, and the adult will just tip this way a little bit, and the altcoins will all move, and then it'll go back, and it'll go back, and then if Bitcoin tips a bit further, all the altcoins fall over, right? And the idea is, of course, that you can look at how the market's reacting to Bitcoin's current move, and if they were scared of it right now, then this would be kind of tanking a little bit more than it is. Now, that may still happen, but ultimately we're trying to capitalize on that. And we look at Bitcoin dominance, which will give us an insight into what, you know, people taking positions and what their mindset is about Bitcoin's current move. And we had the break of the neckline of this double top, right? We had a candle body close, which I said yesterday I was waiting for. Now we've come back up, and obviously we haven't just retested the neckline, we retested this range, so it's a bit of an ambiguous thing, but nonetheless you can see this now maybe coming down a little bit and giving us that intermediate trend shift, which will maybe allow setups to play out a little bit better. So you can't just look at Bitcoin as an entity by itself, right? You have to see what's going on under the hood in terms of the mentality. Now, this could obviously just reverse straight away, but this is telling me that still right now today, we could have a little bit of movement for some altcoin longs. And it's just going to be a little bit of in and out, right? No big deal, maybe a day max, hopefully a little bit less. But that's the idea. And this is how I kind of look at the market, trying to figure out what's the mentality at the moment. But it's obviously, there's not many good setups at the moment. I mean, let's just have a look at what Wormhole was doing. Right, yeah, so Wormhole yesterday, we were talking about this little pocket as a nice little bounce, you know, just trying to hold that. So there's a few things potentially playing out, but you can see very perilously that any a bearish move from Bitcoin right now, which would be, of course, a loss of the 50 maybe, and you might want to a loss of the golden zone would be another thing to look out for. And of course, if I can find the 30-minute chart again, which I keep losing, I've lost it all today. I've been spent so much time trying to find these charts today, you won't believe it. So, and again, if we lose the four-hour 200 MA, those are the lines in the sand to pull the plug on your trade. But currently, we're above it, and that's great. We're still in the golden zone, which means there's going to be some buyers coming in. So the premise is still in play, but the way you need to be approaching these things is obviously you can dissect Bitcoin to have an in-depth understanding of these shorter-term trades, and it can be very powerful. And I think, Walter, your technique is really impressive, and we do need to learn a little bit more about that. But for me, I'm a little bit more of a simpler approach, and my idea is like, what are the lines in the sand I need to trade off to be successful in the fact that Bitcoin is king, and I'm not actually going to trade Bitcoin. So it's a different kind of proposition. So all I care about is where Bitcoin's going to be, right? And does it help my trade? Right. And obviously, if Bitcoin is up here, it doesn't help a long trade. But if Bitcoin's down here, it does. And it's a really simple proposition. And it's just trying to weigh all these factors up. So I'm a little bit hesitant about this trade, but you can see, you know, the price action has stopped and there's a potential for reversal here. But that's the whole game. But it's difficult trading right now. Difficult trading. And let's just see how the CME is doing. Interesting. Right, so we're interesting. Okay, so there's not much of a disparity there between those two. I don't think it's going to give us much signals. But again, Pepe we were looking at yesterday. This is a setup and intake. Potentially you can see a bounce here. But look, there's just too high risk. And this is what we're talking about, choosing your setups wisely, right? There's a trade here for sure, but it's just not as good as this, which has got a lot of open air below it and a lot of resist and a lot of support underneath it. Whereas not this one, sorry, I keep losing all these charts. But then with Pepe, there's so much resistance overhead, making this area for the price action a lot more promising. And it will be the first to break down if Bitcoin loses one of those things. So therefore, this is essentially how I approach the market. And if we just look at what's the other setup, there's another setup I was paying attention to, which I just looked at, Pengu, right? So this one, I look at it. I don't know why I've got accessibility mode on this. Hang on, just turn that off. Sorry, what's going on with that? Right. So this trade will be in my tab group, will be here for a while, because guess what? This is where I want it to be. So I'm going to be maybe even here, right? So maybe in 2 weeks' time, you'll see me struggle to find Pengu and bring it out of mothballs, because I know that this is lining up with the next time Bitcoin is at support, right? And this is just essentially the way I play it. But let's just check in with the money flow. Yeah, I mean, it's just not looking good for consistent altcoin longs at the moment. This is total 3 representing crypto total market cap minus Bitcoin and Ethereum. It's just not looking good. This is where we wanted to be. This is where we want to go, and it's looking weak. So with your trading at the moment, be very short term. Be very mindful that there is as we were saying yesterday, there's a serious disparity between the excellent kind of bullish nature of Bitcoin at the moment, and the rest of the altcoin markets. And if I just try and find this photo, that's the wrong photo. That's the wrong one. Now, this isn't a particularly helpful chart because it hasn't got a key. I think the idea is that we've had 3 quarters in a row now, quarter 4 from last year, quarter 1 and quarter 2, and I think the dark blue is public institutions and the light blue is ETF funds. For 3 quarters in a row, we've had more net Bitcoin inflows for public companies and ETFs, and ETFs are very significant. So what is this telling us, right? Everything from a coffee shop in Spain, which is using Bitcoin to help with their capital issues, to bigger companies around the world, like in Japan and so forth, making massive moves. So when I look at the price action of Bitcoin, I'm always at the moment very bullish, and because all of these dips are considered by the world essentially as buying opportunities, whereas the dips in crypto, not that consistently at the moment, because it's like we're really struggling. And if we zoom out of theta, right, and we just turn the divergence indicator off, and we zoom out of theta and we just switch to a higher time frame, like, this is we're not in a strong place. We're at the bottom, which is good, right? And we're trying to reverse. So it's always a good opportunity. But I can see this entering negative price discovery, like a lot of the lesser tokens as well. So very difficult trading right now. And if my theta position does come into play, I will let you know. But I think that's about me for now. I mean, any thoughts on that guys?
No, that's very interesting. I mean, with a lot of this, so how do you sort of decide? So there's a bit of a latency.
Go ahead, Walter.
So what I was going to say is, how do you decide sort of which ones to sort of hone in on within a day? Like, do you have certain days where you just focus on Bitcoin rather than alt, or do you have certain days where you look for certain altcoins that, for example, you just focus on high caps as opposed to sort of mid or low caps?
Yeah, I mean, I don't necessarily trade on a daily basis. I mean, obviously, the way I'm trading is skewed slightly differently now because I'm a front. We're all doing front-facing stuff, and of course I could be trading more, but it's just my lifestyle and whatever is. I just prefer to take 30% every couple of weeks. Just wait for a really good setup and do it that way. But in terms of the market cap I won't be looking specifically. When I'm investing, then I'll be obviously making decisions about what I choose and what pools I choose from based on, because I want obviously diversification, and we want a combination of ultra low caps, mid caps, and high caps, of course. But when it comes to trading, that's only going to inform the capital I'm going to use and any concerns around volatility. For me, but if we look at the context of this market, right, we have a lot of tokens which are entering negative price discovery. So there's a certain specific criteria which I'm looking for, of course. So obviously I need a coin or token which isn't in negative price discovery, right, which a lot of the market is, because buyers aren't paying attention to that, only sellers are, or even really sellers aren't even paying attention to that, right, because there's no structure. So right now I'm looking for coins or tokens like Theta, which are coming into support, long-term support, right, ideal places to invest. But I'm then looking for the simple basic trend dynamics. I just want to see volume. I want to see a confirmed higher high, probably into a range above. And then I'm looking to enter at the bottom of the range below, which is essentially allowing for the current very hesitant behavior in the altcoin market at the moment. And then if I see those things and I have nice confluence and it lines up with Bitcoin, then I'll go. But it's slim pickings right now, to be honest. And the criteria will obviously change based on the context. And the context is always determined by the state of the altcoin market, whatever Bitcoin's doing. So Bitcoin, I mean, a move for Bitcoin above all-time highs as an example. Everyone was like, well, that's an easy signal to trade. Well, no, it's not. It's not an easy signal to trade because, I'm not going to buy the breakout of an all-time high where there's more sellers than there will ever be, right? I'm not doing that. So I am left with a very specific criteria. I either need Bitcoin to have broken above all-time highs, cracked through a couple of levels, really found a solid foundation with a reversal pattern above previous resistance, then we got something to play. But that's like 2 or 3 weeks down the line potentially. So, so there's times where it's just like, and there's nothing for me to trade because I need Bitcoin to be down here, or I need it to be 3 weeks in the future. Right? So that's essentially my mentality all the time. It's very much, and I think this is the difficult thing for crypto traders. It is being able to assess the context at the same time with doing all the work we all do, looking at setups and trying to evaluate candles and these kind of approaches and what's going to give us the most get the probabilities in our favor and understanding the patterns. But you've also got to do this juggling act with the crypto market, and it's ever changing, and it just takes practice. And you're not going to get it in a year. You're not going to get it in 2 years, right? You just got to accept it's a journey. And my system's not perfect. It's not, but when you're trying to essentially survive in an extremely chaotic environment, I mean, you have to be good flying by the seat of your pants, ultimately.
100%.
Whereas, but it depends on the context, because when it's in a bull market, everything's just perfect. You get you get these cup and handles, they just play out, you get breakouts, you get the perfect retest, and away you go, right? And we had 6 months of that back in October 2023 to March 2024 when Bitcoin then broke all-time highs. But the altcoins haven't had that. So it's very difficult trading. It's super difficult trading. And a lot of my long-term investments, some proportions of my positions are out of reach. But because I've been scaling in, other parts of my positions, I've been slowly kind of reproing down with the price action, right? Which is great. But it's just, I mean, that's how I do it. And obviously, I think when the market's a bit better.
No, it makes sense. Yeah, you have to be very nimble with crypto. Like, you have to be ready to move fast. You have to be ready to sort of even like hold out for quite a while before taking any action. So you need to also be very patient. And sometimes I think, it's like the skill set that you need to trade, predominantly trade crypto, particularly altcoins and meme coins. Are they necessarily sort of transferable to trade in like the futures market or trade in FX or trade in indexes? That's something I sometimes wonder, because I remember like there was a phase where I did like try to attempt trading meme coins, and boy oh boy did I get humbled, because it's a very very different market when it comes to technicals. The technicals that do not mean anything in those markets. It's very fundamentally driven. It's very narrative driven. It's sort of very hype driven as well, and you kind of need to be plugged into a lot of that data to make the right decisions, and you also need to be incredibly fast. And sometimes I'm surprised how some of these like 17, 18-year-olds are able to get a quick hang of it. Sort of getting in and out of these markets and turning over and making quite a bit of money. But like, yeah, it's like, in my opinion, like two different skill sets as well. Because then it gets like crypto traders trying to come into like the Forex side of things. Do they find it easier? Do they find it a lot more like, wow, like, it is a lot easier compared to what I had to do with meme coins and altcoins?
Yeah, I mean, if let's say arguably the youth of today, and sadly we're not that anymore, right? So let's just say that the youth of today
speak for yourself, Paul. I'm still a young lad.
Did not mean to offend you, my 16-year-old friend. I mean, so if they've got their finger on the pulse to trends, and social media more than we do, and they can interpret it and react faster to it, and they can maybe make sense of the tweets which are happening and then how that impacts the market better than we can. And maybe that's something we need to get better at. I mean, it's one of the reasons why we've got a grant, right? My younger version of myself is doing some excellent kind of shorts on Hola Prime X at the moment, and he really does have a really good insight into this part of the arena, which perhaps I don't. And I think it's very interesting. But for me, my strategy with memes is either don't, or wait for it to be exactly where I want it to be, know that I'm going to jump into it and it's not going to do anything until somebody tweets, and then maybe take a couple of months, get in really low, and then just sit with a small amount, and then just whenever it does decide to go randomly with the starting gun, then you're in the money, right? But trying to chase meme coins, I mean, it is changing, right? Because we're talking about stocks, right? Coinbase, they've announced that they're trying to essentially get traditional stocks on the blockchain, so they can offer them in a very in Nvidia on the blockchain, right? Something, it's like, wow, this is the future, right? And Like,
I mean, this is already happening. Like our RWAs are already on chain. Like I at times trade like gold, for example, on chain. There are platforms like Ostium, for example, they're doing really, really good works, like tokenizing a lot of RWAs, and they're also looking to do the same to get into tokenizing stocks as well, and putting it on chain. And like the scope for a lot of trading activities on chain is just really, really broad. But it is the future. I mean, it's not just the future, it is present. Like these solutions are there.
Right.
These projects are ongoing.
Yeah, it's like, what does that, so if we look at like, if we think of like blockchain technology, which underpins the crypto market as a whole, if we look at that as the future, and then we look at, how we've always trying to figure out what does that look like, right? Is it like just crypto and the blockchain tech just completely wiping out traditional finance, or is it going to be traditional finance just playing ball like this? And then what does that look like? I mean, does it make stocks potentially more volatile because it's on Coinbase? I'm like, it's people's mindset, isn't it? So it's going to be very interesting.
It increases market involvement. It increases market involvement.
Yeah.
Like, because if like there are a lot of participants, for example, that are on chain that do not engage in RWAs, they do not engage in stocks, they do not engage in gold, they do not engage in FX, right? But they engage in a lot of stuff. Like they engage in altcoins on chain, they engage in meme coins on chain. But the moment like these RWAs go on chain, they are going to start engaging, because they're going to be like, oh, nice, like this is now accessible to me. I don't need to do a KYC to open a stock trading account or a broker account. I can just plug in my wallet and play, right? Plug in my wallet and do what I already do, right? So for them, it's just an extension of more products of what they already trade. And obviously what that means for the bigger market is there's just now more participants, there's more liquidity engaging in the market. And like that's always a good thing, in my opinion, because there are some markets that shrank after COVID. For example, the FX market did shrink quite a bit, particularly gold and the euro market. They downsized, just after the COVID period. And of course, we're seeing the dollar value dropping rapidly, over the past few months, and so like these are solutions that are definitely much needed to ensure that the market still has like fresh pools of liquidity coming in on a regular basis.
Yeah, I mean, it's a very interesting time, and it's going to be very interesting to see how it lands. But I think I only see it as good things for crypto. I really do think that. But I also see I don't see a lot of the peril of crypto going away either. I see it morphing into an even more powerful beast with populist tokens and all kinds of stuff. So you talk about memes and how like you humbled you. I think, the space, look, because we're talking about the regulation in the US, and just like, we want proper regulation. We don't just want no regulation, right? There's a difference, right? So there's the SEC going after every single thing because they don't know what it is, and they're trying to, because is it a security? Is it not a security? Right? We've definitely moved on from that, right? And that's not helpful, and it hasn't been helpful. I mean, and Jerome Powell just said today, right, very bullish things about crypto in terms of banks using it and stable coins, and it's all great. But the problem is, the current political climate, like, what is the motivation behind it, right? What is the motivation behind, essentially avoiding that argument, right? Now, it allows access to the market. It allows more people to access it. It maybe clarifies tax policy, which is very helpful, and it stops all these lawsuits, all that kind of stuff. Great. Maybe it improves the security of exchanges and making sure that exchanges have sufficient money to back up the capital, all that kind of good stuff, right? But the other side of it is, if the space turns into a populist dystopia where there's no use case for anything, and it's just, well, he's my favorite politician, so therefore I'm going to buy, Gavin Newsom's token, right, or whatever, right? It's like, then we've got a whole new set of issues for people, right? Like the GameStop thing, all of these sorts of things, which they're going to have to now face because the handcuffs have been taken off and they're running free, when really they want the handcuffs taken off, but we still want like a GPS monitoring bracelet, right? We still want that, like a grounds. I mean, I don't know what you think of that, but it's going to be, it's going to be very interesting in the space. But I'm optimistic, but not in terms of protecting consumers to the degree which people are selling regulation as. So
yeah, it's gonna be new scams gonna come out. It sounds great. It's definitely gonna be new scams coming out though, for sure.
oh, well, there's always a new scam, right? Always. There's always a new scam. Do you Walter, this is your screen, right?
Yes, sorry, yes, it is. I'm just waiting for this to. So I took this order actually. Where is my Hola Prime account? There we go. So I placed this pending order at the bearish order block, and then stop above the high, and then I'm just, again, this is just a simple 1 to 2 back down to retest that 800 EMA. But there's a part of me that's like, I'm also kind of not praying, but I'm like trying to be hopeful that this doesn't move overnight. For me, gold in Asia and London is sublime. So like a normal scenario in this case would be like the market might just hold its level overnight. And then, well, when I say overnight, I mean overnight for me. So if you're in New York, it would hold its level over the course of the afternoon. And then obviously, like as we go into sort of Asia morning, which is evening, early hours of the evening in New York. And of course, if you're in London, you're looking at midnight. Then of course, what we could see is the market could then trade into this order block a little bit deeper, and then we could see that sort of rejection to the downside in the morning. So this is for me is what I'll trade on my personal accounts, because that for me the kind of setup that has a likelihood of paying off, as opposed to this happening in New York session this evening. So yeah, so that's what I'm looking at the gold now anyway. So say that again. So what did you say?
I said, there we go. That's the exact move of what I would think that it would look like. Accumulation.
Oh yeah.
Phase, manipulation, distribution.
Exactly. So accumulation,
like
then that
delay,
manipulation.
but I said that what you just drew,
and then it. Yeah.
What you just drew.
No, that's right.
That, accumulation, manipulation, distribution phase. Yep.
Distribution. Yeah. Like the majority of the time, like that's what it is. Like, I mean, like, but that's one setup, right? That's just one part of the playbook. Like the other part of the playbook is, of course, being able to trade these kind of continuation moves, like today, where the market is just like running. And then another playbook that I have as well is taking. So this was a reversal trade that I took on Monday. So this set me up really nicely for the week. So I've had two wins in a row today this week so far. So like this playbook was a 5 minutes bullish order block retest. I don't typically always take this setup. I only would take this if it's a scenario where price looks like it wants to reverse, and it wants to reverse very fast. Then I know trying to take it off the 15 minutes may not yield anything, because in those cases the market may not mitigate against the 15 minutes bullish order block. So I tend to just look for a 5 minutes early entry before that shift happens. And then that way, at least I got in early, and if price doesn't mitigate that 15 minutes order block, it's okay. But what I like the kind of setups that I personally am a lot more comfortable trading are stuff like this, right? Where the market basically just accumulates for a period of time, and then manipulates, and then distributes, and then retest the key level, and then I'm just looking to basically enter that bearish order block, and then drop. So this for me is my signature style: accumulation, manipulation, distributive of the distribution to the downside. So yeah, trading, you got to have multiple. It's like hunting, right? You need to have multiple ways to hunt and kill the deer. If you run out of bullets, what comes next? Use the knife. If you run out of knives, what comes next? Use your fist. If your fist gets ripped off, what comes next? Use your teeth. If that doesn't work, well, you're screwed. But yeah, that's
wow, that got gnarly fast.
But yeah, Robert, that's it for me anyways a bit. So
I'm sorry, Robert, I forgot to say hello. Thank you for saying good morning.
Absolutely.
Yeah, well, we've only got a few minutes left. Something's happening with XRP. My trade hasn't hit, frustratingly enough. It's just this fight. Is actually right if I have a quick look at XRP.
Mm-hmm.
I usually don't like to look at XRP.
The good old Ripple.
Yeah.
Really? Oh, I don't know. I pegged you as a Ripple lover.
No, I mean, look, I was using Santander's OnePay FX back in the day, which was the first kind of proper use case of it, but because of all the SEC stuff which I just mentioned, it got canned.
Yeah.
And again, XRP, an last cycle for me, but it was the worst performer. But I mean, I won't go into why I'm grumpy on XRP, but as you can see, my theta hasn't frustratingly entered yet. Which kind of highlights that the premise of my trade is probably doing all right. Now, this is XRP anyway, so this is the big picture, right? We've been dancing around this area for a while. These are the highs. We're in no man's land. I hate saying it, but we're kind of in no man's land at the moment. But there is a breakout occurring of this channel, which is not a particularly good channel, right? However, this moving average is the key thing which has caught my attention, right? So we've broken out of this pattern and above this moving average, and we're currently retesting it. Now, obviously, we're back in the pattern and we're below this resistance line, but another move up from here, maybe something like this, and then the moving average coming around, there's something to play here, right? Now, this is something in the next few days to have in your back pocket. So nothing to trade now. I mean, some people will look to buy the bounce here, but it's too risky. Resistance, right? But this is a breakout, right? It's not unusual, right? It's just come to the top of the range. There's nothing special. There's still lots of sellers here, but these will soon vanish, right? If we do get another move, right? And then come in, right? That's the idea. So just if anyone's big on XRP and looking for a little setup, there might be something coming down the pipe in the next few days, which essentially would be a breakout of this level, right? Which is pretty ambiguous, which is where the risk is, right? It is a little bit ambiguous, right? You look at this and all it's nice, but then you look at this and it's like, it's not so flush. But this moving average is the key thing, right? Bots come in on these things. So there's a bit of a premise flipping these sort of things. You can see it's been resistance. So we've got an SR flip of sorts here with this moving average. So if we do a bit of multi-time frame analysis on it, there may be a play here over the next few days if we get a bounce from Bitcoin. But yeah, that was just XRP. I mean, it's not a great setup, guys, right? But there's something maybe coming down the pipe. Do you agree?
Yeah,
absolutely.
Why you would say that?
It looks like a classic break retest continuation, but of course, waiting out the initial rejection phase before sort of like getting in.
Yeah, I mean, it's a bit dirty, but that's the game at the moment, right? So yeah, cool. Well, good stuff. I'm so sorry my trade didn't come in today. I was honestly, I was like, come on. I looked at it this morning. And I'm like, this is gonna arrive just at the session, and it's just not. It's just sitting pretty.
I mean, this week is this week is for the market is a very. I think a lot of traders are cautious this week. There's a lot of data coming out. NFP coming out this week is quite a few days of the market closing on Friday and closing half day on Thursday. So. Yes, I think this week is just one of those weeks where traders are not looking to overcommit to positions and just like sort of wait and see how things play out later on.
And it's going to be Tuesday, Wednesday next week till we get some proper kind of movement following in the weekend.
Yeah.
So,
100%.
Yeah. So we're not telling people not to trade, but we're telling people maybe to just enjoy the barbecue, right? Maybe something like that.
Yeah, just control your expectations. It's not much to expect from the market now.
Yeah, cool. Right,
Sure.
all right. Well, I think we've probably come to the end. Great session, guys. It's great to have you two in the same session. I feel like I learned so much, or rather, I make lots of notes.
Yeah,
and
that was
things
awesome.
to look into.
Yeah, now this was awesome, Michael. So nice having a session with you as well.
It was definitely
all a pleasure as always. Yeah, that's pretty cool.
I think the next session is. I mean, I don't know. There's nothing on Friday, but we've got a couple of other days. So, sure. I think the next session is 30 minutes time, folks. So stick around for that. We've got some great stuff coming down the pipe again. But Robert, thanks for being with us, and of course, Michael Walter, great to see you. But that's it from us for now. Until tomorrow. Thank you very much.
Until tomorrow, guys. All the best, guys. Have a good night. Cool day ahead.
Take it easy. All right.
Hey, Paul, Iris, how are you guys doing today?
Good evening, guys.
Good evening, good afternoon. I'm doing great. How are you, Iris? How are you, Sam?
Very
I'm
good,
doing
very
great.
good.
Awesome.
Yeah.
Awesome. Did you sorry, go on.
I was gonna say, I know we're a trading show, but before we get started with the trading, I need to know the conclusion of the bat episode yesterday.
That's literally what I was gonna ask.
So the vet told me he was very upset that I moved my stop loss. He said, I'm leaving, but don't you ever do that again. So I said, you're right. That's something, he says, that was very undisciplined and you should never do that. So, and then he left. So no, it was all, I think he was ready to go. Yeah, all good. And no bets today. So it's a bit boring.
That's good.
Yes.
Wow.
But we had a good trade. We had a good trade.
Yes.
I'm very, I don't think
you
I
mentioned
can
on Discord.
I don't think I can beat this trade in July.
Oh, okay.
I think it was 12R, 13R. And it was so mechanical. We talked about the golf when you hit the ball in a certain way, and everything is just. This is one of those moments for me, and it was amazing, and I love to go over. But I'm very curious about your trades too, Paul or Sam, because you were trading in a very difficult environment.
Yeah, I did a bunch of scalp trades. Actually, I posted it on Discord. You mentioned as well, you took a short as well. I honestly, I can't remember exactly. I'm going to have to pull up the trading platform in order to find out exactly where I entered.
Yeah, I'll go over my trade. But you, what do you do?
Thing is, we can't show other platforms, so...
Yeah. I will say on Discord when Sam, you're saying you made some scalps, I was like, man, he must have carved it up. Today was a difficult day, and in the morning. And honestly, I think the only thing you could have done was just scalp it up, essentially carve up some points here and there.
Until you see my trade, and my model.
But the Nasdaq and the Dow are different. When I looked at the Nasdaq chart, I'm like, this is Iris. This has got to be Iris's day. Like, there's no way she didn't have a great day. So I was super excited to see your post on Discord for sure.
Yeah, I'm very excited. Awesome. I mean, I'm very everything just lined up. It was one of those moments, and already we were like yesterday. We were eyeing the gap. And the good thing about this day was because we're in all-time highs. Not when it goes on not on Monday and it goes on Tuesday, you can have a gap below or it can go to older gaps. So we didn't have any other gaps. There was just one gap. So that that gave me more probability for that move. But Sam, you've heard me talk about that specific model before, and it's just amazing how I do have a couple of models built around it, but I had so many confluences into this trade. It's just, I hope I can beat this one in July, but it's going to be hard. I can tell you that, because this one, everything just lined up so perfectly. Yeah, I'm so excited. I recorded it as well because Mega gave me that tip. And I'm trying to now record everything also for my own execution to improve things. But I had zero drawdown this whole trade. Zero drawdown.
Lovely.
It was just amazing. Yeah. I want to go
what a
over
great start.
Too, but let me know if you want to start out or you want me to start out. I
don't mind. I mean, I can share my screen. I mean, okay.
Let's go over your trades. Yeah.
Yeah, I'll go over what I did. And I'll have to kind of cross-reference with the actual platform to find out where I entered. Yeah. Hopefully you can see my screen any second. I'm just going to add it.
Did you use footprint again?
Yeah, every time. So right now the market looks a lot different to how it was when I initially entered. So the first trade I did was a short position at 3:35 broker time, which is, let me just calculate, because even the time difference of so it's 8, 6, 7, 8, 2, 3, 2, 1. So 1 1:35 my time was the first trade I took. Okay. So if I get rid of the volume profile and make it look how it would have looked at that time, because it's naturally changed. 35. Right. Okay. Yes, I remember this. So just imagine everything past this vertical line obviously didn't exist at that point, right? So we're only looking at this area here. In fact, I can do the replay thing, can't I? Oh, that's a lot. That's actually a lot better. But just do the replay.
Beautiful.
But okay, cool. We'll do that, and then I'll drop it down to a 5-minute. I forgot that we have this replay in TradingView. I rarely use it though, so.
Me too. Even though we're trading.
And then okay, cool. So the volume profile looked like this at that time. In fact, I can actually show you the live volume profile. Here we go. All right. So we created like a gap in volume as we pushed down. Now, what I was looking for is a continuation trade. So I shorted the market in this area. And basically, I was aiming for the lows again, but we also have a gap here. So I was kind of very, very quick scalp, essentially. That was my aim. But what actually ended up happening is I got out about there. Mainly because we just saw at that period in time with the footprint, if I switch it to the... okay, TradingView won't allow you to do the footprint on replay, annoyingly. So I'm going to have to now go back. This is all getting a bit confusing.
You can't get all of everything you want. All right, Sam.
Exactly. So yeah, the trade was this candle right here, essentially. And again, very, very simple. We had a lot of buyers come near the top, and they just failed to really get it much higher. And then I saw the sell pressure come in, so I entered pretty much at that 295. And I got out looking at the 1-minute chart. Oop, that's the 2-minute. Show me the 1-minute. Somewhere here. Oh, this is looking very messy. Here we go. And I got out essentially as the same thing was happening to the sellers. We were producing bigger numbers, and this was pre-market, so these numbers are like genuinely quite big for the pre-market, especially like 200, something like that. And we just weren't really pushing it down. And then as we started going up and I started seeing heavier buyers come in, I just decided, all right, time to get out. So very quick scalp. That was the first trade. And then I did another one. Again, when it came back into this area, I jumped in again. Because I saw the same thing happen again, 430, failing to push it up, and then the sellers came in, so I jumped in again. I did catch all this, but this time I thought, no, actually, I'm going to hold it. I'm going to try hold it to my TP, and it sadly started reversing on me, and then I got out at 1 at break even. I opened 2 positions on that trade. I got 1 at break even and 1 with a bit of profit. So that was kind of like a failed trade. And then I jumped in for a buy once it broke it from the other side. So now if I just do candlesticks, so it makes it seem a bit easier. Once we broke that gap from the other side, now I'm looking for a continuation to the upside, right? So these areas, I look at either a rejection from them, or it can break through and then continue like that. So those are the way I trade it. So if it's on the upside above an area, I'm looking for it to come back in so I can buy it. If it's below, I'm looking for it to, reject down and I can short it. So I basically just flipped it. The moment we got back up and then it went back in, I was looking for some confirmation on the footprint to buy the market. And I can't remember if I saw it on the 5-minute or the 1-minute, but I did see basically the exact same playbook again. I saw heavy selling come in, but very little kind of movement down. And we saw that come in again here, heavy selling, but it just wasn't really working out for them. Also, the cumulative delta was getting bigger and bigger on the sell side, but we were just going sideways. and that gave me another confirmation to okay. So I jumped in again, but this time for a buy, and I bought it pretty much. I let it pop. It popped quite quickly here, and then I got out around here. No real reason why I got out. It was more just I'm kind of happy with that move up. I didn't want it to because it was very choppy and rangy. I just take once it hits a certain amount, I'm happy. I'm getting out. So there was no real reason. Like there was nothing I saw in particular for me to get out, but I decided to get out around here, just because I was kind of happy with the trade. And then it retraced, and then I jumped in again for another buy somewhere in this area. I can't remember exactly where. Let me just have a look. Jumped in. Okay. Oh, yeah. There was news after the news. So the news happened at 3 p.m. and then I jumped in for a buy. I think here suffered a bit of drawdown, but I had my stops below the lowest point, and then it kind of came back in. But it was quite hectic, and again, I jumped out around here, and that was the last trade. Oh no, I did take one more trade, a short position, literally up here, and this was because there was a gap at that point in time. So if I just find out the time of that trade, that was at 5:16. So for 3:16 my time, it would have been.
So after the news.
Yeah, after the news. Yeah. How do I fast forward it? Ah, here it is.
Yeah.
So if I just go up to 3:16.
Oh yeah, that was my 10-4.
Not quite. That's the news, and then it was. Yeah. Here it is. 3:15. So I shorted it literally at the tip of the candle, and I'm so annoyed. Because it was such a good entry, and the reason I shorted it was that your entry.
Well, you'll see. We have to start getting, because I find it difficult when we talk in different times. But if I look at the chart, like, oh my God, you will see my my analysis, and it matches with a lot of what you're with your, and it's exactly where you shorted it. I think it's exactly where I shorted it on the NQ, because. You obviously know that it ran down quite a bit, right? So that was the turning point. Yeah. No, you'll see it is just, I recognize it on it's on S&P, but obviously, So S&P took out a high and Q didn't. So I had divergence, which gave me an extra confluence that it was going down. So you went down sooner than the NQ. Yeah.
Right, I'm with you. I mean, I shorted it because there was a gap right here. And then I just wanted to see some kind of confirmation in that area to short the market. And as we approached that area at 5, here it is. Again, heavy buying came in. They were still kind of pushing it up, but then it just stopped. Just dead, completely stopped. After all that buying, it just wouldn't go any higher. Then the aggressive sellers came in, and I just shorted it right there. But the stupid thing I did, for 1 minute, it just kind of went sideways. And I just had this feeling, and I was thinking, look, I'm up a good amount. Do I really need to be over trading right now? I've already hit my targets for the day. And I just thought, okay, you know what? I'm going to get out. And I got out. I'm talking £6 profit, like literally nothing, right? Just basically almost nothing. And then it just flooded down. And I was like, why?
Yeah. And that was exactly. But well, maybe you can implement some of my things and I implement some of yours. And then we're going to get we get both in the world.
Yeah. So that was annoying.
I had a lot of confluences around that area. So I will tell you what I looked at. And for me, it was like, I just market ordered in, and I just, I'll go over it, but you'll see how my confluences build up. And especially with the SMT, we call that SMT with the ES. So you took out a high, we didn't, and those are the best trades. And I had another couple of confluences, and I knew, this is going to go. This is now rejecting of that level, and obviously I had still some business with that NWalk, with that gap, like since yesterday. But it was a totally mechanical trade, just based on data and time. So Yeah, I love it that your things match. That's why I find it so interesting that it's a different way of looking at it. But if you find it all together, it's like, oh my God, it's so interesting. So like I said,
absolutely, yeah.
yeah.
I mean, that's the cool thing about trading. I mean, even people with completely different strategies sometimes
Exactly.
looking at complete different bits of information. A lot of time they see the same thing. They don't see the same thing, but they get to the same conclusion. And that's the beauty of trading. It's there is no right or wrong. It's whatever works for you, whatever fits your personality and makes sense in your head, then great,
Yep.
But that was my trading day.
Well, interesting, because I would not have been able. That is really something that I am looking to refine, is trading in those those kind of settings. But then again, I'm really happy with my trade. But then I don't know how many times this was one of the best trades I think I've had in months, to be honest, with everything lining up. But yeah, I would love to learn to also trade in these kind of conditions what you've been doing. So that's something to work on, I guess. So yeah. So you didn't have any trades, Paul, today?
I did. I did not post them in the Discord. I need to be doing that. I had 2 paper cuts, and then I had 1 good trade that made it back and a little bit more. I can either go over that now, or we can get to your juicy trade. Mine isn't as juicy as yours. I'm very positive, but whatever you'd prefer.
Yeah, let's get Iris. Let's see her trade, because it was very similar, and then we can kind of, while it's still fresh, and then Paul will get to yours if that's cool.
Yep.
Yeah, sure.
Awesome.
Okay, let me see again. Present, and it doesn't give me the slides. Oh, his slides in PDF, right? Share screen. Okay, here we go. See, I have to switch off my when I have 2 monitors on. Let me just do this.
We also have Robert watching again.
Yes, Robert, he slept in.
He did sleep in, so he didn't get the trade. Well, Robert, hopefully you can get a trade in this session.
Oh gosh, I already I was typing when I was okay, hold on. Let me see. We were here. Let me just go over. So this is Eastern time, right? I'm on Eastern. And Sam has already heard me talk about the 10-4 model. So what does that mean? I wait for the 10 o'clock candle to print. I'm on the 2-minute here just to have more data on. So here, I'll go to the 1 minute. It doesn't really matter. You can see here the 10 o'clock prints here. We have the news, right? And we have a lot of chop around here. So I'm just disregarding this. Then I'll go on the 1 minute because it just makes, I have more things that I looked at on the 1 minute this time. Okay. So obviously I always trade breakers. A breaker is order block. And when a candle goes through it and closes it, it becomes a breaker block, right? So the 10 o'clock here prints, we have a lot of chop, chop, chop. And I think you traded in that. And that was for me like, oh my God, I can't do anything in this. So here at 10:12, we've got a big juicy candle. It activates the breaker. So I knew there was a move up. And what do I have here? My 4 o'clock. It's right over here waiting for me. I was looking at it, but I missed. So I didn't do the 10-4. Why? Because it was outside my macro. Normally I trade the 10-4. It has to be in a specific time. And macros run basically between 10 minutes to the hour to 10 minutes after the hour. But this candle was at 10:12. So I was like, okay, I'm outside macro. This gray box is my opening range gap. So that's the opening at 9:30 and the close at 4:15. So I always grade that. And as you can see, it hit exactly the 25% or the 75% because it's on the way up, right? Plus this orange or pinkish line that you see here is the first presented fair value gap of yesterday's opening session. So between 9:30 and 10 Eastern. So the opening session. And as we didn't do a lot yesterday, this was an important level that I was watching as well. I have another screen. Does that show it now? Did you see my screen change?
Yep.
Okay.
Yeah.
Okay. I won't go over. This is a little bit too complicated. I live in FIP City as well. My 27 level, I was already eyeing this in pre-market, matched exactly with my 4 o'clock. Plus, we had the confluence with the ES. That ES took out a high and Q did not. It doesn't show anymore here. I think it's invalidated because of the time. Okay, yeah, but there was a validation of it. So as you can see right here, you see this wick on the 15 minutes. So it was a 15-minute SMT. Your 15-minute goes through the 4 o'clock. I had SMT. I had another all these confluences here in this area, and I thought if I have two black candles going down, I'm just going to market order in, because for me it was like, okay, it's going to go down then because of all these confluences. Because the 27 level, this is just for me, when it rejects here and we have a wick going through, that was for me. I had about 4 or 5 confluences at that time. So I just market order in this candle. And as you can see, I just put my stop here. I got in somewhere around here. So it was just here, and it was just all the way down. And it was a 12-hour, I think it was a 14-hour trade. Well, I think I got out a little bit just above. I always do that. 13. Let's make a 13-hour trade. And there was something else that I noted, because I was looking at the levels. Yeah, you see here on the 3-minute, I saw there was a flat candle that was just above the weekly open. And obviously those are magnets too. So I had that already marked out in pre-market. So once we were here, yeah, I don't know if you guys also use the flat candles as a confluence.
I've heard of it. I've never personally used it.
Yeah, it's a devil's mark. So the market, it needs to make it it needs a wick. It needs to be so when it's flat, the market it's like a magnet. It needs to make it ugly again. And you see this wick here. So that's the wick that went exactly through the weekly open. So I was eyeing that already. So that was one of my confluence. So yeah, it was a beautiful trade. And let me go over the 10-4 again. So why is the 10-4 in this case important to me? Even though I didn't take it, because it has to be between 10 and 11 to have a significance. And it's sort of like balanced out. They always work in confluence. And because it is between 10 and 11, and even though outside my macro, I know the 4 o'clock is done for today in this area, because it rejected here, and because we had all the other confluence down. So that's why I had high conviction on the trade down. Remember that I said yesterday when I was in the trade, like, oh my God, the 4 o'clock is above above the area. Why I got a little bit confused. Do you remember that I said that?
Yeah.
I mentioned the 4 o'clock yesterday. The 4 o'clock was again above it. Yesterday it went to your level that you had the winning trade, but afterwards it went up, right, beautifully, and it went even higher. But that was confusing to me as well, because I just use it, as you can see here, in all. It's just for me such an important level. But yeah, so here we go. Beautiful trade. I'm very happy, and
Really nice.
yeah, really, really nice. And
I love the little notes. I love you, NQ.
I actually wrote, when I was writing it down during the trade, I said it was actually, I love you, NQ, I think. And then I removed that when it hit the. But I'm just happy. I started to become profitable when I didn't want to have the whole move. Yeah. I just think that it's still 80 points, but there's much more to gain from this move. But I just really don't care anymore. I'm like, okay, I've got this sorted out since yesterday. I was aiming for this, and I'm just happy with it. I'm just done.
Yeah. Oh, absolutely. Same with me as well. Base hits never. I mean, home run trades are lovely when you just get it perfect and they just keep going and you make, a huge amount. But generally speaking, day to day, the most profitable is, not targeting too ridiculous TPs, just kind of having realistic expectations. Once you're up a good amount, take your money, keep banking it, and all those little bits just add up, and you generally that's been the most profitable way for me, at least, to trade. So
Sam, this level here, that was a gap in your footprint. What you said, you saw the short here. What did you? I'm just curious how it lines up with this level.
I can check on NQ on ES. Yeah, there was like a gap in volume. Let me see in NQ if it appeared as well, because go on, Paul.
Currently, we are at where the market's at right now. We are getting to a somewhat of a pivot point here. The ES is really knocking on the door of trying to get outside of a value area right now. It has now touched value area high of yesterday. 1, 2, 3, 4. It's on its fourth attempt to try and break out to the upside. So this is going to be very interesting over the next 5 or so minutes. So we'll see. But yeah, continue. Sorry, I just wanted to get a quick market update.
That's awesome.
No, we need to, yeah.
NQ looks completely different to ES, by the way. I just opened it up and I'm like, whoa.
Well, yeah, and when you look at this morning when you were looking at the ES versus the Dow and the Nasdaq, the Dow was this, the Nasdaq was sideways to this, and then the ES was like this. So when those markets are happening, it's weird because you either got to switch to the Dow or the Nasdaq if you want a pure move, or you got to play the range trade in the ES. And if you're not good at range trading, you should not play around. So
annoyingly, I just saw a trade on NQ, but we've missed it. That's annoying. I didn't realize, because on ES the volume profile is like a range.
Mm-hmm.
There's no gaps in volume; everything's been filled. But on NQ, there was a lovely. I haven't looked at the footprint yet, but I'll have a look now.
Sam is going to the NQ side now. He's going to the NQ side after.
I might do after this. This is beautiful. A lovely gap in volume. I just drew it out, and we basically touched it about 20 minutes ago. If I look at the footprint, though, that might give me some more. I mean, would it have been an entry based on the footprint? Again. We'll have a look.
It's touching the bottom of
it. It's definitely stopped at this area, which is great.
Mm-hmm.
Nasdaq right now is bouncing off of its continuous VWAP a lot right now. So we're either going to break through that level, which would be the 22,740, and we could see a big maybe a big rotation up to a high of day, or a failure. So
yeah, okay, there's not a trade yet. I don't see anything on the footprint that will give me exactly like, oh yes, enter. But I think there will be a trade if we get a little bit higher. What I can also do, another little trick I like to do, is with the volume profile, is find out exactly where the volume drops off. So I can change the row size on TradingView. So I can change it to a bit of a higher number. And usually, once it updates, come on. There it is. It now shows me the smaller version of it. So I can change it again, pump it up to maybe 50. See exactly how small that area is. Where is the volume missing, basically, in that area? Okay, so it's really in that area, just as we had before. Okay, cool. So I'll put it back to what I like to have at 15. So now I know roughly the kind of area I'm looking at. We haven't actually we almost tapped into it. I think it will tap into it. So I'm going to set an alert there. So hopefully in this session, and then with the footprint, something lines up in that area. I mean, oh no, this is S&P I'm looking at. Sorry. Nasdaq footprint. Once it loads, it's very slow today.
Classic technology.
There it is. Yeah. I mean, I'm seeing sellers come in, but I'm not seeing any trap buyers at this moment in time. Like the heaviest buy volume I see is down here, and they're actually defending the area quite well. So if you look at that heavy volume there, 500, 200, the sellers aren't able to really break it below that. They're trying, but it's kind of ranging in that above it. What I would love to have seen is that kind of number right at the top here. And then those heavy sellers came in. That would have given me a great confluence to kind of short the market. But we are getting aggressive sellers coming in. But that alone, I like to see trap buyers as well, because when there's people trapped, their only option is to exit the market when it moves against them. And the moment they start exiting, that just adds more force to, well, if you're shorting the market, if someone's bought the market, and they have to exit, it counts as a sell. So it just adds that extra kind of oomph to your trade as well, if people are forced to get out the market. So yeah, I think it will range a little bit. Hopefully it dips into this area. And that could be a trade.
I wouldn't be surprised if it goes back to the 930 price, to the opening price today.
Let's have a look.
So the opening price, the market opened. So that will be on. Yeah, so that will be around on NQ 22,802, and we just have a bullish breaker that has been activated. So it's sort of like bouncing in the area. So I think we'll have a move. I wouldn't be surprised if we had a move up in the later session.
I
could very well be, yeah.
Iris, I must say, I am starting to feel bearish.
Really?
Yeah, I don't know. I'm getting. I don't know. I'm getting a little like I'm getting not like nervous, or I'm getting anxious about this. Us just consolidating in this top end area. I don't know whether it's feeling like price wants to consolidate higher for the sake of getting comfortable, or just there's just a lack of buyers willing to push the market higher, specifically in the ES, and then we also have this NQ VWAP area where volume just won't go above it at the moment. So and we're kind of trending down a little bit in the last 10 minutes. So I really thought that the price action was going to consolidate enough to either break out of this level or whatever by now, but it seems like it's just taking its sweet old time and doesn't want to do anything at the moment. So I'm starting to feel like I should be shorting this on the ES here. I'm very hesitant, but I kind of want to short it and put my stop at above the high a day.
Yeah. I wouldn't short it below I would short it only when it goes below the 22,670 level. That will be my cue to short it. Everything above that, I'm still long.
Yeah.
I'm not going in, but I like it when we have different opinions. It's
fun. That's exactly why it's definitely more fun when one of us gets to pick we get to pick the opposite sides, and one of us gets to see it come to fruition. So, but again,
Robert is bearish too, so I'm the contrarian here today. Okay.
But honestly, logically, I think you are following what the market is generally saying. Like, generally speaking, we are bullish longer term. So, I don't think you are out of whack to any degree for thinking to go long, to be quite honest.
I'll show you why. What it's based on. And again, it's a break. I love breakers, so I'm going to. Let me just highlight it, and then I can go over it.
Problem. The beauty of trading is, two people can have two different ideas, one bullish, one bearish, and both can actually be right as well. That's the beauty of trading.
Oh yeah.
Okay, let me just mark it on Trading View, and then I'll go over it. Okay, I'll share my screen. So present, share screen.
Robert's going with the moon phase. So there's an indicator.
Apparently it works. It works, the moon phase. In crypto, it works.
Yeah, it was crazy. We tested it out.
Okay, so you see the screen, you see the blue here, this blue area? Am I sharing?
Yes. Yeah, you're up.
Yeah, so this blue area, these two candles here, this breaker, so now it's a bullish breaker. Why? Because we have a close. This candle closed above the breaker. So this is activated now. It's a bullish breaker. It still can reject, but for me, I also have the 1235 root candle here. So root candles are, they have a specific meaning. They have, those guys from DTT, they have them. So, and exactly half of this whole breaker is also in the root candle. So I'm eyeing this, but technically it could go down all the way and still not invalidate. If I would be in a trade, I would still not invalidate my trade. Yes, what we saw with that 10-4, it was also an activation of a breaker, but it just had a quick move up and then it went down, right? So, but this is such a short, this is just the activation, in my opinion, above the breaker. They can always fill, but there is a high probability when the breaker is activated, it will have a better move up. But then again, we're also here in a bearish area. So technically, I'm like, yeah, it could also just, it's rejecting from the 1034, which is also a very important time. But I am just giving it some time. And this looks like created liquidity. So I do think there will be a move down, definitely. But I wouldn't be surprised for a little manipulation up. But we'll see.
Yeah. And you know what? As you were just talking, Iris, I feel like, well, the Dow is continuing to move up, and that 22,680 area in the Nasdaq to 22,700, I would love to see it come down there, consolidate, and then make the big break upwards. I feel like if that was to occur, that would be like maybe a great support area to just let it rip to the upside.
And it's in the breaker, right? So I wouldn't be surprised if we go more down into the breaker area, and then, but it just cannot go below the breaker, because then it invalidates the trade. Yep,
definitely. And as we say that now, things are turning up a slight bit, but still slow. I guess I could just show my trade real quick.
I want to see your trades.
Really, very quickly. It was a very quick one. Well, the one good one, I'll show the two paper. It was actually the good one and then the two paper cuts. So I actually had the opposite situation to Sam, where I essentially did slightly overtrade when I shouldn't have. So I need to tell myself to stop before, I give away the money that I made. So but they were small, so not too crazy or anything. Okay, so at 11, so on my for my pre-market analysis, I was looking at the value area low of yesterday of 62.32, and then I also had I was emphasizing it big time yesterday. The 62.35 area in the ES was just the amount of consolidation occurring there. So I just had that as a level marked off. And finally at 11:15, we saw that, we saw essentially a bigger break to the downside, and then big buying volume coming in here between 11:15 and like 11:17, and then a sharp move to the upside. To me, that was a dip below the value area low, and then a confirmation with like volume to get long to the upside, possible rotation to value area high, which was 62.52. But that was not my target, but that was like the best case scenario essentially. I got in at the, and maybe I can zoom this in a little bit more here. So when we got up to the 62.35 level, this 1120 candle, we had a little bit of a wick here, came back down, and then I got long on this candle once we broke above the closing print of the 1120 candle, so around 62.36. We had some consolidation here 2 minutes later, and then this break up here, and I got out at like 62.4150-ish. So it was a quick like 4-minute trade for roughly 6-ish points, and I had a very tight stop. I was in at 62.36, and I had a stop actually right below the wick of this candle. So actually I gave myself an extra half point. So I said 62.34. So I had a 2-point margin there, very small margin for error, and I got out at the VWAP area here at 62.42. So
Sam,
yeah,
sorry, Paul. I noticed those two? Did you see those two flat candles here at 11:05 ish, at the top? You see those both. You see how we through it. Right?
Yeah, the flat tops. Yeah.
Yeah, so it's such a magnet. I love it. So we had them as well here. I think we had them also on NQ. And here, this one as well, 11:15 on the bottom, right? There's one more. So that is, I need to keep an eye on that one.
Yeah.
I don't think it went through.
Yeah. And then my two bad trades were just they were a couple of micros, and I just essentially did not. I thought that we saw this consolidation here. I thought there was going to be a little bit of a sell-off and then a continue up to that value area high. And I got in a little bit too early, and I got in right here after this candle. I got in right here thinking that we were going to bounce off the VWAP area. I should have simply waited until my pure 235 level to get long, because I had the right idea. It was just there were better levels to get long at, and I was in the moment trying to keep up with the trend, and I paid for it. So that was a good learning moment. I just didn't stick to my relative levels. I was trying to follow momentum there, and I thought that I was catching a little bit of a counter here and in the middle here, and instead I just got chopped up right there, and then I was ended up being right, but trade location matters. So I was wrong on trade location, right on the idea. So
definitely.
That's okay. So.
A bit off topic, but can I say I love the color scheme of your charts. I've never seen white for bullish and blue for bearish, but it works. It looks really good.
Yeah,
it does. I agree.
Yeah, I started doing that a long time ago, because they talk, like in like psychology books, they talk about getting rid of red and green to try and fight that little bit of subconscious, essentially, of what means with what you think of with those colors. So I just tested out a bunch of different colors. I'm like, I like white and blue. I'm just gonna stick with white and blue, and been like that ever since. So
it's nice.
It's really nice.
Yeah, definitely.
It's awesome.
I think it matches the Hola Prime blue as well, right?
It does, actually. Yeah.
It does. Yeah.
I might have started a trend here for us. Everybody switch to white and blue.
Don't tell the business team, because they'll make us all use the same blue then. They'll be like, what a great idea.
Oh, gosh. Oh, no. I mean, at least it doesn't look. It looks good though. It looks clean. So if you do have to,
it does.
But yeah, the volume bars on my personal software, my personal account with the software I use, also I have changed to white and blue, but I never looked at the settings to change them here. So as long as the main bars are blue, that's what I cared about the most, or white and blue.
Yeah.
That's what I did. Yeah.
Yeah, really cool.
But yeah, so that's that for me. I feel like I could have traded more today, but I kind of sat on my hands after those 2 trades, those 2 small cuts, because I was trying to be cautious. But I'm really looking for a trade for our session here. I've been itching. I've been itching. Ugh.
And I see one coming up.
Mm-hmm. Long or short?
Short. I'm just waiting for it to get to that area. This is on NQ, funnily enough. ES, I don't see anything on ES. But NQ, I do see a potential short. I just need to wait for my alert to trigger, and then look at the footprint. I'm hoping.
It needs to go a little bit higher, don't you think so, Sam?
Yeah, it needs to go a little bit higher, and then I could have a short.
Yeah. I hope
it's a little bit of manipulation, little liquidity grab, just a little spike up, take out some of that liquidity, and then dump. That's what I want.
Yeah, everything's just so grindy right now. Come on, there was so much action, and then all of a sudden 1 o'clock comes, and now we're doing nothing. My goodness.
I mean, we are in the worst session for it. If we did the first session of the live stream, market open, so quick. Sometimes I can't even jump in the trade. It happens that quick because you're trying to, what's it called? Manage the whole streaming software, and then you see a trade, and then it just you're like, damn it, missed it.
I'm telling you, when I'm on the second session, all the action occurs from 1 to 2:30. And then when I'm on this session, all the action is happening from 11 to 12:30, or the action where I take the trades. So, from 9:30 to 12:30, I can't win on these sessions sometimes with being able to take trades, but
it does happen like that. Yeah, happened to me many times. And there was one session where I was nothing the whole session. I think it was the first session actually. And I was waiting, and I saw the trade. Like I was just exactly what we're doing now, where I'm waiting for it to go to one area before I can enter. And then, I kid you not, it was 1 minute before the end of the session. Finally, it happened, but that was too late. And the trade was perfect as well, so it was really annoying. But yeah,
classic. Oh my god!
Well, we have
can't make it up.
Well, you had the winning trade obviously yesterday, but the good move came, I think it was after 3-ish, right?
Yeah.
Or, I mean, Eastern time. It has this beautiful, almost V shape all the way to the upside. Yeah.
I'll tell you what, Iris, after today, I might be also joining you with some micro NQ instead. I get dipping my toes in the NQ. I'm getting tired of seeing these cool moves and not being a part of them. So I might need to start upping my analysis on the NQ here and join in with you on the trading there.
Yeah, I do feel, I have traded ES and I'm sort of like presenting myself as only NQ, but obviously I can trade ES, but I just use it as confluence. But sometimes I just think maybe I should also, but I really enjoy, when there's no trade in NQ, I just accept it because for me, I know the levels now so well and I'm very confident in certain levels that I don't feel like, but sometimes I do think I need to branch out as well because there might be a better opportunity. I don't want to get too, get tunnel vision, but I don't know. I have to think about that. But I do feel like maybe CL and I do use ES as confluence then. I think we're going to get our spike up.
I hope so.
Let's see how far she did. Yes. How far do you think it will go? Where do you think it will go? Yes.
Well, my stops would be around 22,760. So not that. I only need to spike a little bit, not much. But my entry would be around anywhere between 22,745 up to 22,755. So that would be kind of my entry area. No, sorry, my stops will be a bit higher. Sorry, 22,781 roughly would be my stop.
Okay.
22,781.
I think on the ESU 25 here, are you?
Yes.
Here, let's.
I am still aiming for the 930, but I'm not in a trade.
Well, we could target that high of day from yesterday at 262.65. Maybe take it out and go to. Yeah, rough. Yeah, we could. I could see 62.75 for sure.
What's really weird though is how ES, Dow Jones, and NQ have completely diverged from each other. See, on ES, I'm more bullish by the looks of it. Yeah. On NQ, I see a bearish trade, so that's putting me off a little bit. But we're in the area. Okay, we're in the area. I think there might be a trade. Okay, we see heavy buying come in.
Yeah.
Yep.
I have
I'm just
another
gonna pop up my chart real quick.
Yep.
Okay, so we got heavy buying coming in right now. Now, what I'm looking for is, are they actually any good at pushing the market up? I'm also just going to look at this chart as well. Another platform, big spike in the delta. That's good. Yeah, so the sellers are absorbing a lot of it. Okay, I'm going to have a really tight stop on this one. I'm going to do it. I'm going to enter. Come on.
Are you going short?
Really tight stop. Yeah, I just shorted it. And I'm going to trade it back down to the bottom of the range. In fact, I'll put my... Wait, let me have a look where I can actually target. I've got to keep my eyes. So we saw it went all the way from 500. It's dropped down now to 200. So the sellers are coming in. Right, buyers try to push it up. The sellers are absorbing it, but I want to see a bit more. I want to see a bit more of a reaction happen. We are in that area. If we break above, like around here, I will get out, potentially then flip my bias into a buy. If it does this, then I'm flipping to a buy.
Yeah, we've got the 830 open.
The buyers are coming very strong. They've just eaten up.
It's going higher.
Let me jump into a one minute candle real quick.
Yeah.
Okay, so I can see on the 1 minute. Still looking. So we did have a lot of sellers try to eat it up, but they were just waiting. We're still very much in that area. Okay, so we're now breaking above that area. So now I'm looking at getting out of the market for this one. Just have a quick look. Because the thing is, the area is technically like that. So I should be a bit more. That is technically the area. That's the whole gap. So I'm not going to be that hasty. I just want to see any trap buyers.
I have confidence in the move up.
I was about to get long the Dow there. I missed my entry by a half of a second. Dang it. That was rough. I was about to get long at 88.60 with a stop right below. I wanted to buy at 44.860 with a stop below 44.840, and it just literally spiked up about 20 points and then just opened up only 5 points below that entry. So that would have been a insane scalp, but I wouldn't have been looking at that. I would have been looking at targeting 44.920 to get up to the highs from earlier. So I might get long. Still if I get the opportunity.
Okay, so this is looking a bit better now. Now we've got those trap buyers at the top. Now the sell pressure is coming in on the 1 minute. I want to see it happen on the 5 minute though. I want to see a bit more, confluence. I am going to target the bottom of the range for my TP. Like so. And now my stop will still have to be above, what did I say, 80 something? 80 is a bit high, to be fair. I can actually keep it a bit lower down, 772, maybe something like that. But I am seeing now, I want to see how it looks on the 5 minute. I did jump in a bit early. I was a bit too hasty to jump in. I should have waited for that confirmation. On the 1 minute, it looks good. On the 5 minute, I've seen better. We are coming to the bottom of the range. Hopefully, in this area, I don't know. Who knows? It might break this area, might not. But I like to be quite base hits, right? I'm not looking for a home run trade. Just grab that little bit of profit and get out.
Yeah.
I got long the Dow.
Show the Dow.
I got
Do you
long.
trade the Dow a lot?
Do you want to?
No, but I'm just simply basically testing the waters on the micro with the Dow because I want to trade the Dow more. I got long at 44.873, targeting 40. I want to target 44.9 right before the high, just for the sake of liquidity. But I am putting a stop right below this doji candle that came in the minute before at 44.858. So
I entered it long as well on.
If you want to show it, by all means.
Yeah, I'm looking for the CFD for the Dow on TradingView, but I don't know exactly here. Let's see here.
It would be US 30 or DJ 30. It depends on the broker. They will have different names.
Yeah, US 30. Let's see here. Okay. I'll just share. Okay. Sorry, I'm working like 3 different things here. This is all right.
That's okay. I see you got a screen up. Do you want me to add that screen?
That's perfect. There we go. So.
That one. Yeah, perfect.
Yeah. We are really that was not a very strong push here to try and break above. Again, my stop is at 44. Well, on here, the stop would be 44.546. Right where this 21 EMA is, essentially. I might need to be a little bit below that. No, I'm just going to keep it. Just going to keep it there. Really would love to see the Nasdaq and the Dow kind of take off together here.
Yeah. Sellers asked on my trade. The sellers are still struggling, but I'm still going to hold it for a bit. It's kind of a bit meh.
You're still in the short,
trap
right?
buyers, so I'm still very much in the short. Yeah.
So you're in the ES, you're in the Dow, and I'm in NQ.
No, I'm NQ as well. I'm NQ as well.
NQ as well. Okay, so we are favoring each other. Okay, good.
Honestly, Sam, I feel this feels 50-50. I would not be surprised if your short works out really well here. Things are very grindy right now, so
Yeah, I mean, I'm just targeting the bottom of the range. So I'm not, it's not like a long, you know, I'm looking for a huge push down. Just kind of go back into that kind of area that's been defended for quite a while. I'm just looking for that reaction, you know. We've had a reaction to the area I wanted, that I shorted, but I'm looking for a bit more. It's been a pretty weak reaction. I kind of want to see a bit more aggression come in. I don't think the full thing has played out yet. So I'm just keeping my eye on the footprint of any, you know.
So what I'm contemplating, if I'm going to take TP at the 8:30 open, the 8:30 price, so that's a little bit lower, or I'm going to hold it until the 9:30 open price. So that's the normal market open. So that's the only thing that I'm wondering if it might reverse on me and you get your short when it reached like on the NQ, that will be at 22,774. I wouldn't be surprised if it just has a little bit more of a spike and then reverse. So I might lower my TP to the 8:30 price instead of the 9:30 price, which will halven my risk reward, but it still would be valid. But
we are seeing rejection right now. We are seeing that rejection occur. If it's going to hold, if the Dow is going to hold, it's going to hold here. So if not, I will get stopped out. I was one tick away from being stopped out right there. And
so in a macro, so it has to either grab liquidity or balances out an imbalance.
All right, I just got stopped out. Small little $10 loss. This was just more so like trying to get a feel, because again, I've talked about it before. The Dow is super spready, so it's like 5 points where it can be spread out sometimes. So when you are playing around with tight stop losses as well, with like where you only have a 20-point stop loss or whatever, you got to be on the ball here and you got to be on the dot. So that was a fun trade to get a little bit of a feel for the momentum of the Dow here, but the Nasdaq is looking a little bit like it's trying to turn around.
I'm starting to lose a bit of confidence in this trade, mainly because the area I targeted has been filled. It's no longer a gap in terms of volume. So it's had the reaction. It's been filled. I'm kind of on the edge. I feel like it could push down a little bit, or it might just take me out. I don't know. So I'm not seeing the numbers on the
Dow Jones and the NQ. When I've been testing a little bit of those two together, and I have the best trades when Dow Jones would do the opposite.
Yeah.
So I did use that. So if I see it go down, that gives me more confidence that the NQ will go up.
What's interesting with the Dow is I think the NVIDIA is like the largest component of the Dow. So it's tough. Like, for example, when I look at, you were actually talking earlier about how when you look at the Nasdaq price confluence for or you look at the ES for confluence with the Nasdaq, I kind of do the same thing with the Nasdaq, where I actually look for the Nasdaq to be the leader, and then I jump in with using that as confluence into an ES trade, because the XLK portion of the S&P 500 is such a heavy weight. As long as the XLK and like the XLY, like the healthcare, tech, and financials are kind of uptrending together, then I really like an ES trade. So that's kind of why I'll look at but the Dow is kind of an iffy one. I will actually keep an eye on what you just said there and see if that pans out more than not. But yeah, the Dow's a weird one. It's just a weird.
It is, yeah. But my trade has to start running within 6 minutes. Otherwise, I'm getting out as well, because it needs to be done in this macro. But then again, yeah, well, we'll see. It's
Yeah.
it's in our gap, and it's sort of like hanging out. It likes our gap, the one gap that has been bullying us since Monday.
Yeah.
Absolutely. It's I'm still holding. I'm going to hold. I think that there will be more of a reaction. But wait, actually, let me look at cumulative 3 point down to 2.4, 2.3. Yeah, the numbers are just completely 50-50, pretty flat right now. It's actually a very balanced market. It's very balanced, which is annoying, which is very annoying.
Yeah.
I just want to see those sellers come in with a bit of aggression. I'll just pop up my screen and show you guys what I'm looking at. So my entry, we're just hovering around my entry. So I don't want to be too hasty and just jump out, because it could still fall into my favor. But I'm really just keeping my eyes, not just on the final numbers of the footprint, but how the numbers progress, right? So we had 53. How's that changed? Dropped down to 43. I'm kind of looking for any huge big drops in either direction. So we went from 50 down to 23. So that was obviously 30 buyers coming in. Do you see what I mean? And
Yep.
you kind of got to focus loads.
Yeah.
You kind of do mental math in your head constantly, like trying to tally it up. All right, so 64 for the buyers, dropped down to 40. Okay, that's 20 for the sellers. Plus, you're trying to look at who's got that aggression coming in with big chunks, at any given moment.
Yep.
But it's very balanced. I mean, there's no kind of obvious. Whoops, didn't mean to do that. There's no kind of obvious winner at this moment in time.
Yeah,
So,
I'm very hesitant. I'm very hesitant at the moment. We might. This is just a rough trade location. This is rough. This is just too rough.
the only thing working in my favor that's keep giving me hope is a few trap buyers at the top, right at the tip of the candle, and then we had sell aggression come in, like 117 here, 81, 54, and they've kind of been fending off the buyers from breaking that area again. It's the only thing giving me a bit of hope, but everything here in this kind of little range that we've had, there's really not much there.
Yeah.
So if it dips back down to these lows, I'm very happy to get out and take my profit. Very happy then. This is playing out a little bit too choppy than what I originally had anticipated. I thought it would be a nice quick move down.
Yeah.
Okay,
I think we're going to get the move.
Oh yeah.
To 22,773, and then that's the 830 price, and then it will either just go downwards. But I do see it going to one of those levels, one of those opening prices, either 830 or 930. But I don't think 930. I think that's a little bit too high, but I could be wrong.
Mm-hmm.
It's very.
We just had quite a rapid move up.
Yeah.
Yeah. Yeah. That was a lot.
Quite a aggressive move. But
I am going to be.
Good thing is that the sellers have fended off those buyers again. So every time the buyers come into this area, they're getting on the footprint as well. Yep. You saw the numbers go from high to low in this area here. But the buyers are more aggressive than the sellers, I would say, overall. You're seeing bigger no, it's actually very 50-50. It's very balanced, the market. And the annoying thing about balanced market, it means, well, no one's winning. It will go sideways, and it will keep going sideways until someone or a few people or whatever, big institution, someone unbalances it. So it really is 50-50 now.
I'll tell you who's always winning. Those brokers collecting the commissions.
Yeah.
They're the ones that are
absolutely.
winning.
They're having a good time too.
Yeah, they
Yeah,
love today. They love it.
Absolutely. That's the business you need to get into, collecting the commission and the spread.
Mhm.
Exactly. Yeah, so many mixed signals right now between looking at now I'm looking at the Dow. The Dow does not look very good, but the Nasdaq with the S&P 500 actually relatively look decent. So beats me.
It's hard to read, to be honest. I'm just going off the breaker, but if I look at the price action and if I would not take the breaker into account, I also would be like, doesn't look really like a very nice area or a nice. It's just a behavior that's sort of like it's in a bearish fair value gap as well. So technically, it could just go down. It is in a OTE level that also it has been met, so it could go down. It could go both ways technically now if I would look at it, but I still like just go a little bit higher and then go down, but it could just fall down anytime as well.
How about Sam's favorite market
what
here,
I hate
gold?
What I
But I'm
don't
not
like
changing my
about this is the gap has moved up, which generally, in my experience, the market will try and fill it, meaning it will go higher up in the short term to
What level?
try and fill that gap.
What's
The gap
the
in
level
volume
now?
is now at 22,765 is the gap in volume. So before we had it where I entered and it's kind of been filled,
Yeah.
and the sellers aren't pushing it down. They're trying. They're getting quite aggressive now, but they're not pushing it down. So I might get out of this trade at pretty much break even, wait for it to go a bit higher, and then jump in. I think that would be the best action for me right now, just because of that gap.
That
Yeah.
coincides
jump
with the
in
830 price.
Yeah,
Funny.
I think I'm going to do that. If it just gives me a little bit of profit, and then I'll jump out. I hate to exit at a loss, even when. There you go, $7. I'm out. All right, I'm out the trade. I'm going to wait for it to get to here, and then I'm going to short the market.
And if it's going to cover that gap, it's going to happen real quickly. So you'll probably have to be ready on the clicker there to re-enter, I'm sure. Those low volume gaps, you know how they fill very quickly.
That's it. And normally they react very quickly. So when it taps into it, boom, it shoots off very fast, like you said. This one, it just stayed in it, and it just kept hovering about, and then it filled the gap, and now the gap has become a bit higher. So this whole ranging area doesn't, and the market just balanced itself out very quickly. So it's probably a good idea to get out and wait for the next opportunity, which I think is up here. And I didn't really see anything. I mean, I jumped in a bit quick. I should have really waited for that trap and the aggression, just like here. Here's the trap, 210, and then a bit of aggression. Could have entered a bit of a better price, but still, nonetheless, the trade wouldn't have been that great. So,
yeah.
And the annoying thing is, you kind of know that it's not going to move until the end of the session. It's going to get to 1 minute before the end, and then all of a sudden it makes this move. So,
yeah, at 2:31, cue the move. By the way, I meant to
someone
ask.
is watching this.
Yeah.
Go on.
I meant to ask. I got a new mic setup and everything. How does it sound? It sound okay? Is there a lot going on or anything? Good.
It's really nice.
Cool.
You've
Sounds
got one of those filter guards and everything. Really nice.
Yeah, fancy. It's fancy for me, that's for sure. So,
What mic did you buy? Because I still need to buy a mic.
I can send you the brand. It's I'm gonna butcher how to pronounce it. Maono, Maono, Maono. And there's too many it's like the HD 300 or something like that. So you can look it up. Not too pricey or anything, but really good balance of audio quality. So I'm already happy with it. I've tested it out between yesterday and today, and it's last night and this session now. So it seems pretty good.
It sounds good.
It sounds crystal clear.
Beautiful.
You can start doing those ASMR videos where you're just like, "Hello, ladies and gentlemen. I hope you can."
Just start scratching the mic, you know.
That's funny.
That is too great. That's the real revenue stream that I gotta be in.
Oh yeah.
Sometimes I see that stuff and I'm like, how are these people? They just the ways to make money nowadays. I'll tell you what.
It's annoying. It's one of those things that I wish I jumped on the trend when it happened. It's the easiest thing in the world, right? You just get yourself a mic and just kind of make a few noises nearby it, like.
When you put it like that, exactly. Yeah. Who knew? Exactly.
I would love to meet the person who invented that, who discovered it. That was, something that people enjoy to listen to. Like, I don't know.
Yeah. They gotta be on a yacht somewhere. They gotta be on a yacht somewhere. So.
Absolute genius.
Come on, markets. Let's do something.
Still ranging about.
I think NQ just
still
had a
very
little bit
balanced.
Of a it went down again, up, down, yeah. No, it looks like it's.
Here comes your short that you're not in anymore.
I'm happy because, truth be told, that could have gone either way. The market was so balanced; it was a flip of a coin at that point.
I agree. It's not a good idea to be in. It's too mentally taxing, and especially when you can get in at a better price sometimes and whatnot. I completely agree with you.
Yeah. I still think it will go a bit higher up and then fill that gap at the top and then maybe make another reaction trade where I can jump in. But I doubt it will be in the next 15 minutes. So,
yeah. I'm not moving my stop. It's either a stop out or a winning trade. So
that's the best way. Sometimes you got to just hold on.
How far is your stop, Iris?
It is at 22,719.
Gotcha.
So
your stop was exactly where my TP was.
So there's that sort of logic. Yeah, definitely. It could have been a little bit better, but what was it based on? I should have that clear, right? The breaker, let me see. I think I had technically when I would do the breaker all the way down, that's 22,683. So that's a no-go. That's too far out. So I based it on a wick. Yes, a little bit complicated to explain. There's a wick on let me show.
Do you want to show your charts when you're? Yeah,
let me share it with you guys. Here you go. Sure. I based it on this wick, just below the middle of it.
Mhm.
And I don't know if, yeah, you probably never used or heard of the terms inversion fair value gaps. So I sort of like, let me just, if I do this, I just put it a little bit below the middle, but technically it could, and this, if you have a lot of wicking back and forth, you can consider it a balanced area. So technically price doesn't have to go below this area to get rebalanced. So sometimes when you have a lot of consolidation, it can mean that it's balanced. So I'm sort of like hoping, I know we don't hope in trading, that this area is better. But on the other hand, we've got liquidity, it's all equal. And it could easily drop down here and then take this liquidity and then go back up. But I'm not willing to risk more money on this one, on this trade. So it's just, yeah.
Yep.
Yeah.
And this is the green box that you see here is the 130 price. So I do not want to see the bodies going below that. That's actually already for me a sign that. But if it keeps hovering in that, well, you see it's already going down. But then again, I've got one or two more lines in the center. That's okay. I hope it just bounces off and goes back up. Yeah, what time is it now? 14:21. Okay. Yeah, this liquidity here it could just go down and grab this and just go back up, but we'll see. I'm still sort of confident is a big word, but I'm aiming for this orange boxes here. That is the 22,773. That was near your level, Sam, that you said that you saw that gap opening up.
Yeah, I'm starting to look a bit more short term, really short term, more bullish now, based on the footprint.
I was about to say the same thing. 11:18, seeing all that volume come in, create that hammer candle, and then this indecision right here. Looks like the sellers are starting to lose a little bit of confidence or something.
So there's also OTE levels that I use for the calculation. So I calculated this range, and we call this the golden zone. So, but technically it can reverse from 50%, 38% already, but we're already at 62%, and this is the 702. So, but yeah, it's don't like that.
What were you seeing, Sam, on that footprint? Apologies, I didn't mean to cut you off there.
No, it's absolutely fine. It's kind of switched again. So it keeps switching. This is the thing. Now I'm looking at it and I'm seeing more bearish. So the fact that I'll just show real quick, and then
yes,
getting punched in the right cheek and then punched in the left cheek. I'm telling you, it's
I mean, at the time there was like quite heavy volume sell side, and we were starting to go bullish above it, and I was like, aha, sellers are getting trapped. Long wick on the last candle. But now those sellers are actually following through and are actually able to push the market down. So now it's come back to a bearish kind of view. So yeah, it can change so quick. That's the problem.
Yeah. Regardless, there's no way I'm taking.
I do think it will still go up and fill that gap.
Yeah.
Yeah. For me, this is not in this area. I would like it. I mean, it's annoying because if I did hold, it would have been pretty decent. But truth be told, at that time, that would have been pure luck.
Yeah. You would have been fighting with yourself on what you were like. You're looking for details that confirm what you're seeing, what you're thinking, your trade process, your trade thesis. And when you're not seeing those details and you get out, that's the right move. I think that goes for all traders. You shouldn't, like, you noticed it was a coin flip. because you were seeing contradicting things. Got out. Perfect.
Well managed.
Exactly. That's just part of trading. I know from experience the amount of time I held into a trade, even though I started seeing, things conflicting, and just thought, no, I'm going to hold it. And I wish I got out at that time. I wish,
Yeah.
I made the split decision just to, all right, cut my risk right here and there, because the trade is not how I expected it to play out at this moment in time. So, yeah.
Yep. Yeah. And you save your capital for a better trade. That's all there is to it. Even if you take a small little loss on it or whatever, it's a lot less than what you would have lost. Or if you were to gain on it, you wouldn't. Your trading philosophies might get a little bit mixed up and have you make bad trades going forward. So it's better for the former than the latter. So
yeah, exactly.
I'm with you.
You can always jump in again.
Exactly. Yeah. It could go down first, retest a little bit more of this area, take some liquidity, and then make that move up. But when you have a really, really good trade that everything just lines up, you have no doubt. It's just sort of like, then I'm doing this trade. I'm like, what am I doing actually? It's nice to be in a trade again. But if I lose this trade, it's just, it's a loss. But okay, every trade can be a loss. But it's sort of a bummer if you have the trade of like, one good trade. And it's sort of like, just leave it for the day. And then you end the day well. But then again, it's either going to be a stop out or it's going to be a win. And I'm not going to re-enter if it still goes, because then I just go over my trade, and then I've learned my lesson. No, I should have waited a little bit longer, because we learn most of our losing trades.
Yeah.
I mean, it's always, I think I'm going to be stopped out, but that's okay.
Let me call the floor traders real quick that are on the Nasdaq and tell them, all right, guys, put some block orders in here at 22,720. Let's just hold this up a little bit for Iris's sake. Come on.
It's okay. I mean, I actually shouldn't have. I wasn't planning to trade, and I did, and it's how it goes.
You're still in it, so we'll see.
I mean, exactly. Sometimes you can be a tick away from being stopped out, and then it's happened.
Well, I think it's going to go deeper into the breaker and retest it a little bit and then go up. So that means all that liquidity, so those equal lows that you see are on NQ, like from 13, so to 1:30 Eastern, so those three little ones. They just look too juicy.
I mean, it's going down, but it's not going down with much velocity. The sellers are putting a lot of contracts down, but they're not actually moving it that rapidly. They're not moving it that kind of efficiently. So I do feel it will bounce at some point and push up again. So I mean, hopefully it does that before you stop. Because I'm seeing a lot of sell pressure come in, but they're not doing much damage at this moment in time. So
yeah.
I would still be nervous being in this short position. If I was still in it, I would be still a bit nervous, because I'll be like, I don't know if it's going to reach. I probably would have got out a long time ago, actually. Because so many times I've looked at it and be like, oh, no, that doesn't look good. So I would have jumped out at a profit. You see what I mean? So this wouldn't have been one I would have happily held. It's too, I don't know, doesn't look good to me.
Yeah.
It's a beautiful stop out at exactly 2:30 when we are ending our stream.
Oh yeah.
I'm
I told
calling
you.
it.
I told you. It's always. And watch it just shoot up exactly at 1:30.
Exactly.
Yeah, get it over with now. You're just taking me out now. No, it's hanging around this opening price of the 130 candle. It's already below it as well. Yeah, it's a weird price action.
Wow.
Very slow.
Annoyingly, it is time.
Yes.
But yeah, that was a good session.
To be
Really good
continued.
session.
It was a fun session.
To
for
be
sure.
continued. Exactly.
So
So
we'll leave the outcome of the trade for next session.
exactly. You have to tune in to find out. So
Yeah.
well, Paul, Iris, I wish you a good evening, afternoon. I really don't know what time it is in South Africa. I actually have no clue. I know it's going to be more afternoon for you, Paul, but
No, we don't have a lot of time difference. In the Netherlands,
really?
it's the same. We're in the same.
Oh.
It's just all the way down, but
so you're only an hour ahead. Oh,
1 hour.
so
okay.
it's now here. Oh, my computer is on Eastern. I live on Eastern.
So-
That is
8:30.
really weird.
It'll be 8:30 by you then. If it's the same as the Netherlands, then it'll be 8:30 for you because Netherlands is 1 hour ahead of me. So
Yeah, so the
All
market
right.
is open 1 more hour. Yeah, 1.5 hour. Yeah.
well,
So
I wish you a good evening, Iris, and a good
You
afternoon
too, you
and
too,
evening as well,
Paul.
Paul.
And Robert.
And Robert as well, of course. Can't forget Robert. And yeah,
No.
have a great one. And I think we're on tomorrow as well. Same time. I'm not
Yes.
sure. I haven't checked the
Yes.
schedule, to be honest. But okay. Great.
Definitely.
All right. I'll see you guys tomorrow. Have a good one.
Pleasure. See you guys.
Bye-bye.
Bye, everybody.
Bye-bye.